But we get to close it out. Thank you so much. This guy knows his shit. He knows his shit, doesn't he? And he makes, you know what, you made a boring topic fun.
Did I?
Yeah. Yeah. I tell you what, I've had like so many of those issues too. I had like when I first started 1099 and the dude who burned the place down, right? And the person he slept with, at that point, everybody was 1099 because I didn't know any of this kind of stuff, right? And then, because she was obviously greatly pissed off, and even at me, that she's, you know, claimed the W-2. Like, it was just a whole nightmare. Everything was a whole nightmare about that. And that dude sued me. Baseless, but I still had to spend a few grand to defend myself. It's just ridiculous, right? So we don't think about protecting all of our assets. We just think it's never going to happen to us. Sooner or later, it's going to happen to you. It is. But yeah, this one is a fun one, okay? Yesterday, debatable. But yesterday we were talking about, it's not just about what you're doing with the money and making the money, but it's also about keeping the money and growing the money. And it's super important. And so many of us are so focused on our businesses, because small business is tough, that we just don't have time to look 10, 20, 30, 40 years in the future. We don't. And that time catches up. So that's what we're going to talk about in this last session. And I'm pretty excited about it. Who's coming to the 7 o'clock after we finish up? Just excellent, excellent. A lot of you, excellent. Lauren Whitehead was a physicist, and in 1983, he did nothing substantial other than discover a simple relationship. It's called the domino effect. And one domino, he found the relationship can knock over another domino that is 50% of its greater than the previous one, okay? Which stacks pretty big, right? So if you take your lead domino 2 inches and knock that thing over, at number 10, you're knocking one over that's the size of a 6-foot tall man, right? At number 23, you're topping the Eiffel Tower. At number 31, you're hitting Mount Everest. And by number 57, you're on the moon. And that's how something small can achieve something so big. Finding that lead domino, knocking that over, and building momentum. That is also what it does with your wealth and compound interest. It looks pretty similar, doesn't it? It's just a factor of momentum and of time. And you guys know I'm a show not tell kind of person, right? Let me just show you what I've done. Let me show you what the people who have implemented the systems have done. And theory's great, but I want to see what actually works in real life, right? So I just, when I'm going to talk about building wealth with you guys, I'm going to show you what I've done. It's not the only path. There's a lot of paths, right? But we'll talk about what I did here, where I started my own infinite banking policy, which we'll get into and what that is. But I decided when I first started making money, if you remember, I'm going to do the smart things with it. I'm going to shield it from the IRS, right? And I'm going to invest that money and be a good steward of it before I just increase my living expenses. And I started this policy almost 7 years ago, right? And I started putting money into it. And as I'm 43, it's worth $660,000, okay? I did it pretty aggressively and put it in. But look, by age 66, this is $3.3 million, right? At age 80, it's $7.3 million. And at 90, it's $11.9 million. And the neat thing is, as this continues to grow and grow and grow and grow, this is not taxed at any point in time when it's used properly. And it's pretty neat because in one swoop, you can do a lot of damage. Now, to set that up, and this is not where everybody's going to start, it's where some of you can start, but when I started making good money and I really controlled my expenses, what I decided to do was put $100,000 into this policy per year for 7 years. For 7 years. And then that is what's continuing to take this off and grow and grow and grow. But we're going to get into what this is and then how I've used it, because I've taken a lot of the cash in there and also gotten a loan against it. It's almost like a loan on my own money. Technically, it's a little bit different. Some of you are nodding your heads, you know what I'm talking about, and have been introduced to this idea. And when I find something worthwhile to invest in, I will borrow the money and I will buy that asset that hopefully will cash flow. And so let's, simplicity's sake, I have acquired other interests in other companies and other things, but let's just take the infinite banking policy and let's look at the real estate that I purchased with that. So when I find something like, ooh, that's a good cash flowing property, I'll buy that, lend the money, the down payment, get a mortgage, and then I'm going to let that asset work for me, okay? So what I realized as over a period of years, I opened up another policy at the bottom, but I have my primary house and I have 4 other pieces of real estate. Some short-term, long-term, commercial, okay? And that makes me money in several different ways. And we'll break that down later, but it adds a lot to my net worth even if the cash flow isn't there, right? My money's making money in multiple ways. But I did the math on this, and when I'm 65, these mortgages are paid off, and assuming 3% increases in value, in cash flow, and in expenses, right? Property managers and things like that for everything. Let's assume 3%. So by the time I'm 65, this is where it's really interesting, is because let's let time do that work, right? Let's let those dominoes keep toppling over and growing, compounding. And we look, by the time I'm 65, let's say my primary home doesn't cash flow. Let's say I'm living there, but it's paid off. Okay, great. But I'm making money in all those different ways. And so I know when I'm 65, I know I'll be cash flowing about $750,000 a year. And that's just with, 5 properties, not including my personal home, and these 2 policies that I did, right? And so I invested heavily over a period of years, and then I just let time do the work. I mean, it's going to be worth over 15 million at that point. And what I did, these look like really big numbers, and you probably don't need that big of numbers. I probably don't need that big of numbers, but you just realize that's just done in 5 moves, really. That was it. And then I'm just going to let time do the work. So I did that, right? I started making the money in the business, and then I did the smart thing with it. But as you guys know, I burned everything to the ground before that. And if I can do something like that, there's no reason that each and every one of you, right? I would have killed to be broke. I would have given anything to have $0, but I had negative about $300,000 and a credit score that was so low it didn't even exist, right? I never got it, obviously looked, but it had to be below 400. I know the lowest it is 350. It's probably a smidgen above that. That's bad. So I don't want you making the same mistakes, because remember, I did that by getting into real estate, right, during that big upswing. And I signed that personal guarantee, did a lot of stupid things, and it just tanked me. So I don't want you doing those stupid things. And what I want you to do is avoid you're going to make mistakes. You're going to make mistakes. You're going to do a bad deal. You're going to do something stupid you didn't know. That's part of it, right? That's part of it. But you only lose if you stop playing. That's it, right? Remember Nelson Mandela's quote? I never lose, I either win or I learn. That's it. Yeah, it was horrendous, but I learned a lot from it. And guys, this isn't just about money. Money is just a means to an end. It's freedom, right? When you have money, you have freedom of how you spend your time. And that's what it's about. I'm not a fancy guy. I just am not, right? This watch is the same watch my wife bought me when we were dating for my birthday. It's not expensive. I don't know how much she paid for it. It couldn't have been much because she wasn't earning shit. So it couldn't have been much, but I love it. It means a lot to me. I'm not a Rolex guy. And there's no, if you are, that's fine. Just want what you want. You don't need to make excuses for anybody if that's what you want, but spend the money on the things that you actually value, not the stuff that you should value or makes you look good or whatever it is. I'm full on dad mode. This shit's from Target. I run errands. I'm like, oh man, I need something. I need new pants. And I just try something on a Target and I leave. You look appalled. You're like, oh my God. You're all styled and decked out. It's just, and my wife is the opposite, right? I don't look at the Lululemon bill. It's pretty horrendous. But it's really important. It's all about, for me, it's all about security and opportunity and abundance with my family. My mom has been talking about going to Washington, D.C. for my entire life, okay? My dad hates to travel. He is a grumpy old man, right? He's great, but like he just hates to travel. He's never going to take her. She talks about it. And, you know, as I started to get, you know, my businesses started to do okay. And I'm like, okay, I'm making some money. I got some money. I have some time. This is before everything melted down. I said, I bought my mom for her birthday in February. I bought her a book. It was a guidebook to Washington, D.C. I said, happy birthday, Mom. I'm going to take you to Washington, D.C. Then that's when that guy did that thing. And it just blew up, right? And newborn, that's melting down. I'm working 70, 80 hours a week, legit. And it was bad, right? But I cleared that up. I did the smart things. And then I was able to say, happy birthday, Mom. Taking you to DC. And that was fun. Damn, this is hard up here. But that meant so much to her, you know? But main thing is, I'll get my composure. Most of us are not taking action today. We're so busy. We're trying to get by. We're trying to build things. And we're not looking that far into the future, and we desperately need to, because it'll catch up quick. And some of us are behind. That's okay. I wish I knew this stuff had started so long ago. I would have been in such a different situation, but regret gets you nothing. You can do this anytime. You can do this anytime. And that's what we need to do. And you need to start doing it now, because how much has our world changed since COVID? That rampant inflation, you know, and that's the whole thing. If you do a good job saving money, great, but you're still losing. Your money's worth 30% less than it was a few years ago. If it's just sitting in a savings account, bye, gone. It's just a different world. The games our government plays. Absolutely no respect for monetary policy. It is wildly absurd. And savers, you might as well just throw it away. Not completely, but you are not keeping up with inflation, even with it. So the big worry that a lot of us have, I have always had this, is like, will I have enough for retirement? Will I have enough? And I know that's the low key, the stuff that's not always, it's a subconscious thing. But okay, we're doing okay, but man, we know that healthcare expenses get really extreme when you get older, right? If you have kids, maybe they're going to college, maybe they're not. I don't know with mine. I don't know what they're going to be doing. But, you know, you just don't know, will I have enough at the end of the day? Or am I going to have to get a job as a greeter at Walmart? Which, when I met my sister's parents-in-laws, when they were getting like engaged and stuff, you know, I went to their house in Scottsdale. They had a beautiful home, a pool, and a good view. And I'm like, and this was, I don't know, 12 years ago. I'm like, man, someday I'd really love to have that. They look like they got everything together. Yeah, fast forward a few years, and, you know, Paul got sick a little bit, and I think she lost her job or filed disability, never went back, whatever. They're in like a one-bedroom apartment, and I go into a Walmart neighborhood market to get like eggs. Yeah, he's greeting there. And it was unbelievable, but there's a lot of people like that. And I'm not saying I'm not trying to diminish a Walmart greeter. Every work has value. I don't care who it is or what you're doing. It's not trying to be disrespectful. I'm just saying that everybody in this room, I guarantee you that's not what you want to be doing when you're 70. Am I right? Just make sure we're not in that position. I don't want that for anybody. You know, I don't want you to have to do something like that. If you choose to do it, great. I know people like, you know, you go to car dealerships and the guy's driving you back, they're all retired guys who just love talking to people. It's awesome if you want to do it. But if you have to do it because you need to do it, yeah, that sucks. That's not on anybody's game plan, okay? So you have two choices with what I'm sharing with you here. You can focus just only on your business and hope things work out, or you can get really serious about it now. And you can build an amazing, over the next 3-5 years, you can really build a lot of protection for yourself. A lot. And if you do it, right? If you do it the right way, you'll get yourself in a position where you can let time do the work and you just don't have to worry about money. And that is an amazing place to be in. Because business isn't that stable, especially in the fitness and health business. Holy cow, anything can happen. Anybody's business could vaporize. It happened in COVID. Especially, yeah. A lot of gyms in California, especially large group gyms in California, man, did you get the shit end of that stick. Because, I mean, you like the standard labor costs that you have to have legally with salary requirements and everything are so high, and COVID shut down for so long, and so many of those places could not weather that storm. And it was entirely not the owner's fault. Entirely not. And I have seen just complete livelihoods decimated from it. Absolutely decimated, right? Nobody saw that coming. Nobody saw that coming. So I want you, just like I said, when I had all those big problems, like I'm never going to allow myself to be in that situation again. Make that same statement to yourself today. Like, you've got to do this, okay? You've got to do this. And the road to financial freedom is what we're going to talk about. And there's 3 things, okay? The first one is not sexy at all, okay? Just like Matt Becker's talk, right? It's not sexy. We're talking about protection. But we all think it's not going to happen to us. It can happen to us. It can be very real. We need to first make sure we're protecting ourselves. Second, we have to save it, right? You can make the money, but you're spending it all. Well, that's that, right? And then you need to put that money to work and have that money grow. So let's look at protection first. Insurance, oh my God, the sexiest topic of all, right? But, well, first off, protect yourself with attorneys. Protect yourself with attorneys. Matt showed you a lot of loopholes that people do not know how to look at. And then there's also insurance. We're talking your home, we're talking your auto, right? You're talking your business insurance, which is very particular, as Matt pointed out. Those are all very important because one lawsuit can wipe you out. I know business owners who've had a lawsuit that wiped them out. It can happen. You don't think it's going to happen, it can happen. Somebody actually tried to sue, well, more than once. A client tried to sue me. My wife was training her at the time. She was a little nutty, and just, you know those types, right? You're like, oh, geez, man. She's just a lot off about that person. But anyways, she wanted to try a step up, or like not these, on the taller box. My wife said no. She also went to go adjust the music in the music volume in the back room. She does it. Yeah, I can't remember if it was a ligament or a tendon. A ligament, yeah, it was a ligament. She comes back and does that. My wife calls me right away, and she's sitting down and she wants to leave, and I'm like, well, I was asking her questions to determine maybe it was a ligament or tendon. I'm like, I'm pretty sure it's a ligament thing, but anyways, she wants to leave. Drive her to go get checked out, okay? And so she did. My wife checked in with her, all this kind of stuff. She sends my wife text messages for doing such a good job taking care of her, blah, blah, blah. Yeah, a few weeks later, get a letter from an attorney. Or she started texting me like, I just want to know, because I'm not able to work. She's freaking retired, part-time psychologist, which right? Already, you're in for it with those, right? But, oh, I'm sorry, your job requires you to jump up and down while you're working with people? Like, what are we doing here? She's just obviously for a money grab, which she doesn't need, by the way. We know she's well off, but that's just what people do. And what's funny is just like, okay, well, yeah, you submitted the waiver, and here's the text messages saying that it was her fault and what a great job of care my wife gave to her. But that stuff happens, right? So like that just went away, because their attorney was just fishing to see, well, maybe he didn't sign a waiver. Let's, if they didn't sign a waiver, this or that, yeah, we'll just sue their ass. God, I love people, but some people I dislike greatly. But insurance is really big, okay? But one of the biggest ones, and this is what is so vulnerable, the most vulnerable thing is life insurance. And none of us really are jumping at the bones to get this kind of stuff because nobody really thinks they're going to die. But I promise you, everyone in this room is going to die. I promise you. Now, this has gone from boring to morbid, but it is really important, incredibly important. And I mean, at 43, as we get older, you guys, we all have Facebook now. How many friends from high school have already passed away? Like, yeah, right? It's unbelievable. It's unbelievable. And my relationship with Asher Med started with Justin Lesh, right? A lot of you know Justin, an amazing person. And I recorded a podcast with them on Wednesday. I think we did a live together on Thursday, or maybe we talked on Friday. I can't remember, but we talked on the phone, and then the next day he was gone. Completely healthy, 40 years old, 3 kids, another on the way. Just unbelievable, And here's the thing, I have known multiple gym owners who have died over just the past 4 years. And they've all had kids. They've all been fathers. They've all had kids. And can you imagine the spouse and the kids if there's no life insurance? And whether those gym owners were bringing half the income home or maybe all of it? And can you imagine your spouse dying and there's no income and you got multiple kids? That's not a good situation, And one of the first things, because especially as business owners, our work is not done. Most of us don't have enough in retirement and cash flow to get it all done now, right? You have to protect your loved ones, period. And I've seen it too many times, and you've seen it. What's the first thing that happens? A GoFundMe goes up. We've all got them. That hit on Facebook, oh my God, so-and-so died that I knew from high school or whatever. And first thing up is a GoFundMe. And that's great. It helps cover those immediate cash needs and funeral expenses, but whether they get $20, $30, $40, $80,000, how far does that go? It goes nowhere. It doesn't go to the end of the year after doing that. And so you really have to protect your family because, man, I just knew it because I don't know what my wife hasn't worked since her first child was born. How stressful is that? And I don't want that for my kids, right? So it is so important. You need it for your family, for immediate cash needs that come out, right? For debt elimination, if you might want that mortgage paid off, right? The houses, any loans, so they don't inherit that, right? Your wife doesn't have that, your husband doesn't have that. Childcare, that's going to be a big thing if there's both working spouses or one, whatever it is, but there's a lot that goes into that. College, all that things, all kids are expensive, right? And income replacement. Whatever spouse that is making that income is gone forever. And you want to be able to replace that so the surviving spouse and the kids can live normally and not on top of your untimely death are not faced with just horrible financial pressures. Very important. Now on the business, it's also very important, right? I have insurance on anybody I have a business partnership with, right? For a couple reasons. One, if that person died, it's probably going to fill a hole in the business. I'm probably going to need to hire. I'm probably going to have a revenue hit, all those things. And also, a lot of times you'll have a buy-sell agreement. Some of you don't. Talk to Matt if you need one, okay? But a buy-sell agreement is, let's say I have a partner, we own this gym together, we're 50-50, he's the operator, but if he dies, I lose the operator, and his wife or his next of kin is going to have the other 50%, right? Who is not going to be able to contribute anything or anything. Or we also have a buy-sell agreement where if one of us dies, right, it's already bought. Sometimes it's in your operating agreement where the surviving partner will get the shares and it will be paid out to their estate, usually over 3 years, 36 payments. But holy cow, is that going to make things tough because you lose a partner, you're going to have to replace them, and you're going to have a hit in revenue in operations, and you're going to have to make, what is the business worth at? What's 50%? Maybe it's $250,000. You're going to have to pay that out immediately or over 3 years. It's going to be tough, right? It's going to be a big strain in your life. And so you can protect against that, right? So you have that. But all of that, you can get on a key person, formerly known as key man, before we did the thing, right? So it's not just key person. But yeah, doing that can just protect a really valuable employee to you as well, right? So those are all good uses of it. And there's 2 different types of insurance, okay? There's term, which you get for usually 20, 30 years is what people get, but it can vary. 20-year terms, but after that, let's say I have term insurance on myself that runs out when I'm 60, it's going to be a lot more expensive to get any kind of, so at a certain point in your lifetime, it becomes prohibitively expensive to get it, right? So getting it while you're younger is usually a good thing. And then there's whole life, which will last the entire length of your life, which is a phenomenal thing, despite what you've heard from Dave Ramsey. And I'll explain kind of how that works and how you can double that up to do what I did earlier and let it compound, but keep it liquid in case you need to invest in your business or a piece of real estate, or you want to buy a home in the future. All of those things you can do. So there's a whole host of other benefits, but term life is really, really cheap to get, and whole life can be massively beneficial in the long term and actually provide an amazing return, right? So life insurance is one of the single missed things because just nobody thinks they're gonna die. Nobody thinks they're gonna die. So there's a lot that we do in protection. Infinite banking is that type of a special type of whole life insurance that we'll get into in a little bit. But other insurance, business, auto, home, nobody thinks their home is gonna burn down. I just know somebody's garage lit on fire, destroyed half the house because they had those little, those little electric scooters that kids have. Batteries are lighting up all over the place. I mean, it just happens. Lithium batteries, it does. Credit lines, getting lines of credit and just in case you need them, provides a buffer of protection in case you have a bad year. You lose a key person. You want to establish, Bill knows, I preach all the time, dig your well before you're thirsty. Get an amazing credit score. Start building big lines of credit with your credit cards, getting home equity lines of credit before you need them, because when you need them is when the banks will not give them to you. They need you to prove that you don't need the money before they'll give it to you. The line of credit costs you nothing. You just open it up and you don't even need to touch it, but it's there in case you need it. And it can happen. I've seen multiple gym owners even just lose their lease because the landlord won't renew. Bill, you're going through it, right? And you might have like 3 months to find a new place, which means you got to spend X amount to build it out and to move it, and you're going to be shut down for a while, and that rent's probably more expensive because you already had your current facility before lease rates went like crazy through the roof, right? You never know what's going to happen. There could be another COVID, right? I'm sure Bill Gates is working on it right now. You never know. I haven't read that far in the Epstein files. I've been really busy putting this event together, so you'll have to catch me up. But yes, and then protection also from taxes. Taxes are going to be the single biggest expense of your entire lifetime. Even just federally, the top is 37% plus 15.3% FICA and Medicare. But you've also got state tax. I know there's a lot of people from California here. Shit, right? State. Like there's local taxes, your real estate tax, your sales tax, your everything tax, your tax on tax, right? You pay tax on your cable. Like it's absurd. It is absolutely wildly absurd, especially with the shit they spend it on. Like we could all light torches and start approaching the Capitol building right now. Like it's nuts. It's gross, but like it is the single largest expense. And if it actually went to something good, I wouldn't mind paying so damn much. But I don't trust anybody doing that shit, right? You can, and so like here's the thing, you have to play the tax game well. And I know you all have CPAs in here, which is excellent, but you cannot abdicate your financial education to your CPA or even your wealth advisor. You need to learn this stuff yourself. Thank you. Because most of them are going to do the bare minimum. Just like Matt was talking about the attorney, the family office attorney doesn't mean bad, but he doesn't know shit. Or he's not willing to do it or look into it. The fact that he had Matt write that contract, like, dude, I've written a buy-sell agreement myself before. Dumb move, don't do that. But I've done it. Like, you lazy, you're an attorney. For God's sakes, you went to how many years of school and you don't know how to do a buy? I'm a bro and I can Google that shit and get it done in 45 minutes. The hell's wrong with you? So the thing is you can't put your whole, like when you look at the stakes you're up against with your retirement, you can't put that in somebody else's hands. Most of these CPAs just fill out boxes and work more for the IRS than they do for you. You have experience with it, huh?
My husband, that's what he does.
Awesome.
He does tax strategy.
Awesome. If you need somebody, talk to her, okay? Because you need somebody who actually cares and gives a shit. And then you're also going to need, quite often, to bring things to their attention. hey, what about this? What about this? What about this? Because they might not know, and usually they don't care. Usually they don't care, okay? Now, I'm going to talk about taxes, okay? Yeah, Abu needs a good one. Abu needs a good one. I'm going to talk about taxes. I'm also going to talk about investing, but I think Matt would kill me if I didn't say and disclose I'm not a tax advisor, I'm not an accountant, and I am not a CPA, I'm not a wealth advisor, registered wealth advisor, any of that stuff, okay? So I'm providing you with education, but take this to your people, all right? Take this to your people because you can't. Like, you needed to find somebody who's aggressive, who's going to look for all those things, right? You need to match the aggression level. You know, I don't want to go, I'm not going to jail. I'm not going to do anything to go to jail to save a few bucks from the IRS, but I want to take advantage of everything in the tax code. I do want to be aggressive about it, make sure we're doing everything necessary, okay? I don't want somebody who's like, well, no, you can't do that. Well, what if I just did that? Oh, yeah, I guess technically that makes it right. Well, dude, I'm a bro with Google. Come on, get your shit together. So match yourself up with somebody who can do the job, but not somebody who's going to send you to jail with shell companies and stuff like that, okay? Common misconception about Robin Hood, who got me into swords, right? Common misconception is that he robbed from the rich and gave to the poor. That's not actually it. He just gave your own goddamn money back from you who was stealing from you in the first place, okay? That's a pretty cool thing. And so I just absolutely love that. Like, when you pay the least amount in taxes, like that's just your money. You're just keeping more of your money, okay? So it gives me a lot of pleasure when I help people save money on taxes, or not me directly, I give the advice, right? But a lot of us, it depends on how much money you're making, but a lot of us with LLCs get taxed as a sole proprietorship or taxed as a partnership, right? And if you're making a certain amount of money, quite often you need to change your election to an S Corp, which basically lets you avoid, because when you just have an LLC, all that taxable income is subject to 15.3% self-employment taxes as a business owner, right? If I get employed by another company, they're paying half of that, and on my paycheck, the government takes half of it from that paycheck, right? Well, when you're self-employed, you're both. You're the employer and the employee, and you're hitting that. But what happens if you're an S Corp, you can make yourself an employee of the business, pay yourself a much smaller salary, take the rest in distributions, and you avoid 15.3% on that. That's one, when we did the math on yours with everything, I think that was over 20 grand. A little bit more, yeah, on that alone. And then the other thing, make a big, like, it was a lot. I think over 30 grand is what we're able to do with just a couple moves. But his CPA, he's got a CPA. He's an idiot. You got a guy like that. Yeah. I've been on stage and talked about this. Yeah. I probably spoke on this and got more CPAs fired than anybody. But yeah, I mean, that's just one thing right there that can save a boatload of money, right? The One Big Beautiful Bill Act made this permanent. This is a great thing for small business owners. It reduced, there's some stipulations on it, but it reduced like 20% of that taxable income to many of us in this room. Phenomenal tax break that's actually been made permanent. That is excellent. There are some little nuances in there, so bring that to your attention. Make sure your person's getting that for you, okay? Augusta rule. You can actually, yes. I know, that's why I'm talking about it. I love it. I got to meet your husband too. Does he work with just people in Arizona?
Absolutely not. Everywhere.
Beautiful, because sometimes I meet people and they only work with Arizona, and I need a good person to.
Oh my gosh, man.
Awesome, that's great, fantastic. Thank you for coming, even though I had to twist your arm to get here. Yeah, so you can rent your own house to yourself, right? You can get comps, what it would cost to rent an Airbnb or a venue near you of a similar square footage, right? And like, I think mine now, I'm paying myself, it's a big house, and it's like all that kind of stuff, but if you get comps, like I get to cut myself checks, and I reduce my tax burden. I can take 30%, like 30 grand off of it.
You can do more.
I know I can do more. I need to update it and get the new comps, yeah. And I know the tricks that you're yeah, yep. So I want to say that conservatively because I don't want to overstate it, but it's a lot.
$67,000
Boom. I love it. I love it. Yeah. So basically what you do is your business rents your primary house for business reasons, right? And you can rent it to yourself or to your business for up to 14 days a year and not pay any taxes on it. Any taxes on it. It's a tax loophole written by wealthy people who wanted to rent out their golf courses or their golf home courses in Augusta. We know who writes the laws. It's people with the money, right? But we can take advantage of that.
So this year, we've got some big celebrations with my beach.
Mm-hmm.
And Carpenter. And if I use my house as a venue?
Oh yeah, absolutely, absolutely. And we can get this stuff to your tax person because I've got her, right? So we'll make sure she implements a lot of that stuff. You have to transfer the money the same year. You can't do it now and claim it in 2025. There has to be an exchange to make that happen. So you might not be able to do it for this past year, but you can certainly do it for this year, okay?
It's a tax write-off for your business, but it's also non-taxable to you. So it's
Yes.
win-win on both sides.
Yes, absolutely. Fantastic. Your automobile, right? So what I see a lot with CPAs who really don't work for you is you have a gym, okay? So you drive to the gym and you drive back and they're like, yeah, we can't write off your vehicle because that's commuting and that's, you can't do that, right? True. But do you know an easy workaround? Do you have a home office? And are you writing off the home office, which you should, that's the next one? That's 2 places of business now. You're traveling from one place of business, your home office, to your gym, and it's not commuting anymore. And you can write it off. Taylor, where's Taylor? Probably peeing. But we did that for him, I believe. And he brought it to CPA, and he's like, yeah, you can do that. It's like, well, duh. But you can do it standard mileage, and you can do it actual, right? You can do it actual, and sometimes if you're buying a heavier truck, the gross vehicle weight rating over 6,000 pounds, you can take a massive deduction in the first year, right? Sean, everybody's sitting in a different seat, so I don't even know where everybody's at. But yeah, you did that at the end of the year, right? Because you had an amazing year. Congratulations, by the way. And you're like, yeah, we got to reduce some taxes. And if you don't buy the vehicle just to save on taxes, unless that fits kind of what you need too. But yeah, if you have a really big year, you can write off a lot, right? So there's 2 different ways to write off vehicles. Which one's appropriate for you really depends on your situation. But make sure they're doing that, okay? I've seen it where they don't even ask for that. They don't even ask for it, right? Section 179 is kind of what that automobile falls under, but this is heavy equipment, machinery. You can write off about 100% in the year that you buy it. So you could buy equipment on December 30th and maybe 40 grand worth of equipment, like gym equipment qualifies for that. Pretty cool. Pretty cool. Home office. This is the other one, especially to make your auto work. But whatever square footage your office is out of your total home, you take the expenses of that home, including your mortgage or your rent and your utilities. You can even do maintenance, even if you have pool maintenance and this and that. You take all that total, you take the square footage, and you get to write that off.
Do you ever do the rooms method?
The rooms method? No, explain that.
It's basically a different way to get a better deduction versus doing just a percentage. So I have 2 spaces in my house, and yes, the square footage is big, but out of the entire house, it's just a better. Ask about the rooms method with your CPA.
Beautiful, beautiful.
The percentage.
Thank you. I didn't even know about that one. That's excellent. And did my CPA let me know about that? No, she didn't. Right? She didn't. No, that's exactly what I'm talking about. You know how many CPAs missed this stuff already? One of these things. Nobody?
Everybody.
Some of them are Augusta rule. How many people do the Augusta rule? Okay, so all of your people have missed it except for 3, right?
Typically, if you ask your CPA about the Augusta rule and you don't understand it, they're going to say, well, you don't apply for that. Because if they can't defend you in court for it, they're not going to put their license on the line to put it on your taxes. So this is why Well, I was like, yes, you have to learn about it. So if you were like, yeah, I'm renting my space, I'm using the pool and my hot tub, it's, 6,700 square feet. I found a venue that's that same price. I'm doing that one time a month. This is how I'm justifying $67,000 off of my taxes. That's going to stand up in court. So if your CPA doesn't know about the Augusta rule, which a lot of them don't,
That's crazy.
they're just going to tell you.
Crazy to me.
You don't apply for that if you don't understand what it is that you're asking for. I'm really passionate about this topic.
I know, me too. I love this. Because it's so much, when you add all this stuff up, it's a tremendous amount of money. Like for those of you who might not even be making enough, like you're like, I don't know if I could do an infinite banking policy and start doing that and start building for that. Yeah, you can just find it right there. Abu's gonna have an extra 30 grand a year from just us going through stuff and take shit. You and me both. You and me both. Yeah, that's it. It's like, here's why it's so valuable to be in this room. No, and I say this a lot, and this is the value of having coaches and being in masterminds and getting around other people, because what holds each and every one of us back the most are the things that we don't know. But how the hell do you know what you don't know? You need to be in this. This is why do you think I know so many things about so many things? Mistakes, and then coming to events and getting in masterminds and working with coaches. And sometimes it's like, cool, I'm in this mastermind, it's okay, but there's one idea that I get exposed to that leads to $200,000, which I never would have been exposed to if I'm not in these groups or in these masterminds or hiring a coach. Sometimes it's one book that gets recommended by somebody that allowed me to make a business acquisition in a sweet deal. True story. And that's not why I joined, or that's not why it's just one random thing. But thank you for being here. This is what it is. How many of you are picking up things that are big that you would have never known about? That's it. Right? So this is so important. I don't think people understand the fringe benefits. No one was talking about why don't more people do coaching or getting groups where we talk and learn about this stuff? It's a scarcity mindset, right? Yeah. And I lived that. I mean, my parents were farmers. We did everything ourselves, right? And then I was so broke for so long that I had to really recondition myself to be able to spend money on myself. I need to invest in myself. I need to invest in my businesses. Then I need to invest in cash flowing assets. But it took me a long time. I mean, it's probably why I still buy shit for Target. I mean, my wife spends all the consumable, all that. But I don't spend much money on myself, right? It's just a weird thing. It's patterned because I was just so scarcity minded and broke for so long. But what I've realized is that I tell you what, I have spent so much money with mentors and coaches and masterminds, it'd be like, you're crazy. But that's how I've grown so much so quickly over these years. I've invested in myself so heavily. And sometimes it's like a clear thing, like when I join clients and community in this room, I'm like, cool, if I learn that one funnel and I get at least 3 people, I make all my money back. And I made at least 30. It's probably more, I just don't like to make bigger claims than they are, okay? So I 10x'd my investment on that. And I was scared to death to do it. I put a card and I did 25 grand. It was an American Express credit card. It only had a $20,000 limit. I didn't even know it, but they're always good. So they're like, yeah, you're good for it. We'll bring it up. But and I learned so much from them. It was ridiculous. But I was scared to death to do it. I'm like, what am I doing here, right? But just step out of that scarcity mindset and that fear. Anyways, I just went on a huge tangent. But travel, vacations, there's certain ways to do it, right? Meals and stuff like that. But you can do a lot. All of this stuff, are you coming out here for business? Yeah. And that's how I try, when I'm investing in my business, that's the lens I look through. I'm like, okay, but I'm writing off, this is everything's 30% off. If I can write it off through my business, it's 30% off, right? And that helps me spend the money too. But yeah, there's nuances on that. We're not going to spend the time, but just make sure that you're this trip, different things. If there's a business reason, hey, if I'm going to make a trip, he's not in here. He had to leave today, I think. But San Diego, I'm going to be in San Diego. I have a fencing tournament near LA. Then I'm going to take a family trip down to San Diego. I'll visit one of the gyms. It's a business trip. We're going to make that happen. Okay? Find a reason. Health insurance. Did I skip over HSAs? Yeah, I skipped over HSAs. HSAs, health savings account, they're pretty cool because you can just not pay taxes on it. And when you reimburse yourself for health expenses, it's not taxable ever. So it's a great loophole. You can actually connect that to investment accounts too and have it grow tax-free. So that's really neat. Health insurance, obviously, you guys probably already know about that. Cell phone, internet, office supplies, all that kind of stuff, right? Meals out and in, there's nuances on that, but learn those. Learn those. I don't want to spend your valuable time like teaching you the nuances on that, and I'd probably mess it up anyways off the top of my head. But yeah, there's a lot you can do there. You know, anything that's clothing that you need for your work or your job or things like that, supplement shoes, a lot of times those are. You can also hire your children, right? You can pay them up to $14,600 and you write that off. They don't pay taxes on that because that's what the standard deduction is. They have to be age appropriate. I can't hire a 2-year-old and pay them almost 15 grand a year, right? But the cool thing is like, do you guys have social media? Do you do that for business? Yeah. I mean, my 9-year-old can operate a camera pretty well, you know? So it's got to be somewhat reasonable, right? And then yes, this is what I was saying, invest in yourself and your business. All of that is tax deductible, right? You get 30% off of all that stuff, or 25, whatever your bracket is, right? Hopefully lower. Rule of thumbs for write-offs. It has to be business related, it has to be ordinary and necessary, and it has to be reasonable in the amount relative to the business purpose. But you can get really creative, and you should get really aggressive. Don't do anything illegal, but you and I didn't write the tax code. You know, our corrupt politicians did it, so use it. Okay? Mm-hmm.
So how do you distinguish money that you, expenses that you have the company pay for with the company's money and things that you do? Because this is all about stuff that you're personally paying through your personal accounts that you're writing off. So how do you distinguish what the company pays for versus all of these other things?
Yeah, there's some nuances. So sometimes like the personal ones, you can do what's called an accountable plan, and it just exists separate. And it's a way to kind of have your personal stuff accounted for, and that works very well. Other times, you know, I just use my business card for certain things. Now, there are some drawbacks if you were to sell it, and that's where a lot of times you see you have your EBITDA, and then you add in your seller, you know, the what are not true business. It's very common, right? Seller discretionary income is kind of what it arrives to, but that's a question I probably defer to you or just your CPA on the nuances on that. But there's pros and cons of doing it every such way, right? If they're all legit business expenses, though, I mean, I have a holding company, an S corp that holds my other LLCs, right? So it all flows up into there. I pay myself a very low salary.
Reasonable.
A reasonable salary. Yes, that's what I meant. A reasonable salary. And all those businesses flow it into my S corp, and I pay myself a reasonable salary for what I think I'm worth. And then the rest I avoid that 15.3%. And that S corp is where I write off most of the main things, right?
C corp.
I don't have a C corp. Might be, yeah. It might be something, you're right. Yep.
Tax lower.
Yeah. Yep. But yeah, exactly. It might be time on something like that. Abu, right? So again, we dove in. This is, boom! Look at that handsome man. But at a certain point, like, how I started teaching a lot of this stuff is obviously I did it, right? And then I obviously work with a lot of business owners online, Kairos, a lot of gyms, all that kind of stuff, some med spas. And, you know, helping them out in their business, they're making great money. And what it dawned on me sometimes owners who make really good money, all of a sudden, like some bad stuff happens in their business. You know, they can lose their 2 people, and then they have a family thing, and their business hits hard. And then all of a sudden, they're like panicking. They're like, I'm struggling to make ends meet. I'm like, what? And it's because they're spending too much, their cost of living, they don't have any, and they're not doing any of this stuff. And that kills me, because I've seen businesses close, and I'm like, they're shit. Really? You know, and then I realize this is, I'm working with people, it's like they have no plan on all this stuff. Nobody's teaching this stuff at all. And so that's why I started teaching this stuff, because I'm like, okay, we're making killer money in your business now. Now you got to start planning for your future. You got to start protecting it. You got to start saving it. You got to start growing it. So let's get that together. And so people that I help with business, we eventually get into here, some sooner, some later, some we just do this, some we just do the bit. It just depends on where you're at, right? But I think it's irresponsible for me not to help people out with this stuff. So those are a bunch of savings tax things that you can take to your CPA and have those discussions and or fire them and look for a new one. That is your call. But let's move on to save. So we're going to protect ourselves, right, from liability with life insurance, with different insurances, legally. We're going to protect ourselves with credit lines, right, and making sure we have backups just in case we need it for defense, right? We're going to protect ourselves from paying the IRS, undue taxes. Now we got to save, okay? Because I want you to have nice things. I want you to spend the money. I want you to do the things, but I want you to have assets that make money while you sleep that pay for those things. So before you go out and buy the souped up $80,000 Bronco, I want you to have some investments that spin off passive cash flow that make money while you sleep and pay for a Bronco for you for the rest of your life, right? So just be smart with it. Be smart with it, because if you're spending all the money, you're not going to grow any kind of wealth, right? So first, you take your business profits, right? Business profits. Some of it is going to go down to pay down debt. Some of you have auto loans or a home mortgage. You have business loans. Anybody have an EIDL loan? Several of us from COVID, right? So some debt you want to pay back, and some debt just take your sweet time with. Take your sweet time with. That's a 30-year at 3.75%. I mean, it's kind of like inflation right now. There's no rush to pay that back. That would be the last thing I pay back. And in fact, if you can invest that money and earn 10%, you lose money by paying it back. Use other people's money to make money on that. It's called arbitrage. That's what banks do, right? It's not their money. They just make money off of your money. You can do the same kind of plays. But some debt you want to pay down sooner rather than later, right? High interest. If it needs to be paid back in a short time, it's sucking cash flow. Let's get rid of it. But some of it will go to pay down debt. Some of it you are going to save. And the first place that's a temporary holding spot for me is a high yield savings account. A lot of people don't even have that, right? A lot of gym owners I meet have it stuffed into a savings account in Wells Fargo or Chase. They might have $100,000 for a rainy day or more or less, but it's earning like 0.1%, right? One of the fastest things I've had everybody do it, like Rob did it, Naboo did it, like so many people did it, is just open up one that's a high interest, high yield, okay? You can go to, if it's a personal line of account, personal savings account, Ally, American Express, Citi, Capital One, they all offer it. The interest rate now is around 3.5%, give or take. It adjusts with the market, right? There's really only one for business that's out and easy to use. It's Live Oak Bank, and it's very similar. But as a business, that's where I keep all my stuff, and then temporarily, because then what I do, I sweep that money into an infinite banking policy. I sweep that into an infinite banking policy, where it is going to serve to protect, save, and grow the money at the same time, which makes it an invaluable tool. And it's very invaluable for business owners because we can't stuff all our money into a 401k and an IRA. We can't. Because then we can't touch it without big penalties until we're 59 and a half, right? And so they're useful tools, definitely. But I could, all those assets that I bought that have guaranteed, like my retirement's taken care of today. I just got to let time do the work, right? I couldn't have done that if I put them all in there. I wouldn't have that at the, like, so there's nothing wrong with throwing it in tax advantage accounts like IRAs and all that kind of stuff. But we can't put it all in there because number one, we need more liquid capital for backup when we fall in hard times, period. We need money to invest in our own businesses, period, right? And if you ever want to do real estate, or maybe you're renting, you want to buy a home like David Nash, right? Or whatever it is, you can't have it all in a place where you can't touch it until you're 59 and a half. As entrepreneurs, we need to be more liquid, right? So the common advice out there is like never buy Starbucks, never buy whole life, like never spend any money, save it all, live like a pauper, right? Throw it all in a retirement account, and then you can enjoy it when you're in your 60s, right? And just hope shit doesn't go sideways, right? And hope there's enough so you don't run out before you die. Well, the wealthiest people do something different. They're very cash flow oriented. They do a little bit different things. A lot of the advice out there is for personal finance. But why is it that Apple and Google and Microsoft, while they have a lot of cash reserves, they still have tons of loans? Why? Why do all these corporations do one thing, but they're all trying to teach us how to do another? It's because they all make money off of our money. I mean, when we give it to them, they're making the money off of our money. And at the end of the day, if you kind of treat your finances more like corporate finance, you're going to get further. And you can use your money, you can use other people's money to make money, which is great. The 1% do things differently. Has anybody read What Would the Rockefellers Do? Gary Gunderson? Yep, well, of course. I made you read it. But this kind of walks through the difference between the Rockefellers and the Vanderbilts. And they were both relatively wealthier than Elon Musk is today for their times. Just absolute tycoons, okay? Well, the Vanderbilts handed their money down generation after generation. It was gone in 3 generations. Gone. Can you imagine Elon Musk's fortune going to his kids, and in 3 generations it's entirely decimated and gone? Crazy. The Rockefellers to this day, I think there's over 250 members, and they're still among the wealthiest families. And they did it with 2 ways. They protected the money with trusts and infinite banking policies. And it was that simple and very responsible with it. It's really hard to fail and screw things up if you do that.
Isn't it true that that the Rockefellers and Vanderbilts locked themselves out even in an island?
Oh, are you talking about the book, The Creature from Jekyll Island?
Yeah.
Oh my goodness. If you want to never view the world again the same, and you want to realize what's behind the Epstein files probably, and all that, the giant cabal ruling the world, read, The Creature from Jekyll Island. And then you'll be like a cynic for the rest of your life. No, it's kind of crazy. It's crazy. But I mean, that's when the Federal Reserve was created. They all got together, and now we're in what we have, where the central banks print money that they don't have, loaning it to the government, and we all just are basically slaves for all of that. It's crazy. It's so bizarre. But anyways, that's the world, and you got to make your way in it. You got to make your way in it. You're not going to change it, right? It's too big. You will be killed in jail, right? Or hang yourself in jail. But so you've heard of this by like the infinite banking concept, or become your own banker, right? Or it's kind of like the rich man's Roth. It acts like a Roth IRA with as high limits as you can make, really. And it's not going to be taxable income for the rest of your life if you use it properly. Or creating your own family bank. It kind of goes by all of those names. But it's essentially kind of like you're creating your own bank. You're going to become your own banker in a way. So what it is a whole life policy. So it's life insurance on myself that'll last the rest of my life and will pay out whether I die tomorrow or whether I'm 105, okay? And that money goes tax-free to my heirs, which is awesome. So it provides a lot of protection, right? But I have a policy where it's specially designed, where we have the insurance portion, and it's designed in a special way where I can overfund it and throw a lot of extra cash into it. Now, there's nuance in how these can be built, how they need to be built, and they can be done in different ways. But I decided, like I said, to put in $100,000 a year for 7 years, right? And then after that, I have the option to put in like 19 a year if I want to keep contributing to it. Otherwise, I don't have to do a thing. And this thing will provide permanent whole life protection, right? Permanent. And it will continue to grow, non-taxable, and it's going to be at a rate that's around 6%, give or take very small fractions. And this has been done for, what, Gary, 178 years at this company, at Penn Mutual? 1847. 1847. And the market can be down on stocks 22%. This is guaranteed to never go down in value. It's only going to go up, which is pretty incredible. So it provides a huge amount of stability. And it's liquid, because that cash value that is going in there and that is accumulating, I can loan that to myself whenever I want. If I need it for offense or defense, I can loan it to myself, and it's going to keep gaining in value like the money never came out. It'll also accrue interest, which is currently at 5.3%, right? But it's also going to keep gaining. And I get the option if I want to pay that loan back and when I want to pay it back, or I can just not pay it back. So you can pay it back monthly, like a loan, or you can just pay it back when you have the money or whatever it is. But it's really neat because it preserves liquidity. It preserves liquidity. And this thing, because it's uninterrupted compound interest, goes and goes and goes and goes, which is awesome. And it never goes down in value.
Is it like a family bank where you can loan to one of your kids for their first car and use it?
Oh yeah, yeah. It's you can use this money if you wanted to buy a car with it, if you wanted to take a trip with it, right? If you want to do whatever. Now here's the thing though, because you're your own banker, you have to be responsible, right? There's things that you want to do and not do for sure, right? Can you screw this up? Yes. Are there tons of protections so you don't? Yes, but like you have to be a good steward of your own money too, right? You have to be a good steward. So you get to store your money in this. And you don't ever have to use it, get a loan on it should you not want to, but as you enter your retirement years, you will, and just live. It's gonna be like an IRA for you, right? But it's great because it's never going down. It's shielded from taxes for the rest of your life when it's used properly, provides permanent protection, and it's liquid. Yeah. I'll get to that. So this is something I geek out about, right? And a couple years after I set up the first one, I got a second one. I got it on a key man, a business partner, right? And it is a smaller one. I'm just putting in $25,000 a year for 7 years, but I protect myself in case something happens to him, right? Which is great. And I also have another account where I can just stack cash and keep it liquid. And Gary's actually with Penn Mutual, so it's one of the best companies ever. And I have access to their whole team in building policies. This is something I geeked out about, where I eventually wanted to learn all the ins and outs and ways to do this, ways to use it, and all the cool stuff, because there's some really neat stuff in this. Estate planning, like it's incredible. So I actually went through the course and did all that kind of stuff. And then as I started having people, encouraging people to do this, some of these policies aren't built that great. Some of the policies, the agents are making a whole ton more commission. And if you look at what that does to your cash value over 10, 20, 30, 40 years, it takes it from your pocketbook a lot. And some of them just came back really poor. And then so what I eventually did, I'm like, well, you know what? I've already done all this stuff. Let me get licensed, or let me just actually get licensed on it. Let me get insurance on it. And it's going to help because people like Gary teach me all the ins and outs and like the advanced teams for all that kind of stuff. So I can build policies. And I'll build a policy for anybody, or if anybody wants to look into this, and is this the right time for you? Because it might not be. You might just want to do term, but the neat thing about, like, depending on your financial situation where you're at, right? If I would say, because I've done that, I'm like, now's not the right time to start for you, but what you should do is get term, right? And get term and make it a convertible term. That convertible term will lock you in at your current health ratings, and you can turn this into a whole life when you're ready for it, which is pretty cool. But I'd be happy to help you out with it.
Do you need any qualifications?
What's that?
Do you need anything to qualify you for your ability to purchase them?
Yeah, so some of the cons are, like, if you do have major health issues, it could be a little bit more costly, right? Or in rare instances, like, you might not be insurable.
Or 401k.
What's that? Sorry, did I misinterpret that?
Yeah, well, my confusion is that I don't take care of it. And so 401k.
I can help.
Those things.
I can help you take care of yourself.
I'm calling you. If that needs to be already in place before you move into.
It depends. So there's a lot of factors, and what I like to do is take a look, and that's what we're gonna do. That's what we're doing together, right? We're gonna dive into all your stuff, right? That's why we have to get all that information, right? So we're gonna wait for your information. I'm gonna walk you through that. Does your husband do taxes too?
Yeah. I mean, he works for a CPA firm, so.
Okay.
He's not.
Yeah.
Okay. Awesome. Let's connect you guys, because you were asking for so many taxes. I already sent the DM to that person like I said I would. She has not gotten back to me. Not her fault. She probably just doesn't check her DMs. So let's connect you two, okay? Here's the cool thing. You also get protection on this from, and it varies a little bit state by state, but let's say you get sued right? And your insurance is set up correctly. They're coming after your assets. In a lot of states, there's a ton of protection where they can't touch and get access to this, like a 401k. So that's really neat. Like I mentioned, those accounts are not liquid. These you can loan it to yourself and get access to that. And in fact, that can be very useful, like I said, for defense and just have peace of mind. Like if shit hits the fan, I've got some good backup. But also for offense. Disneyland was built from this. Bankers thought he was insane. Like a theme park, what the hell is that? That's never gonna work, right? And he used his policy to fund that, which was pretty cool. So did Ray Kroc. He used it to cover payroll as he was really growing that franchise, okay? And then it can be used for offense, but just for defense. God, I make sure people monitor their credit score, get lines of credit before they need it, because you never know when stuff is gonna happen. And bad things, true or false, everything really bad happens in threes. Does that, like, what is that? Yeah, all the time. When shit hits the fan, it really hits the fan. And like you need a safety net, like just for peace of mind even. Anything can happen. But one of the coolest things is the fact that, like, listen, if all your money's in the stock market and we hit a recession and things go down 20-25%, that is when stuff's on sale, is it not? But if all of your money is already in that, you can't really take advantage of that. But if you could, you can really jump up and skyrocket, right? That's what wealthy people can do. You know, Arizona in 2008-9, when I lost everything, like, holy cow. You could buy a condo that's 500 grand for like 45 in a short sale. Like, it was nuts. If I had any money, if I had $0 even, maybe I could have gotten something, but I wasn't. J.C. Penney, like, really grew in the Great Depression. And he had a lot in his policies. He actually bailed out a bank. It's pretty cool. But yes, this is gonna serve as retirement income for you, which is amazing. You don't even need to loan it to yourself for other purposes. This will grow. You saw, I'll be like 90 something. It's gonna be, what is that, like 11.2 or 9 million? I don't remember. Or 9.2, I don't remember. But it'll just keep going and going and going, and it's gonna be what you're gonna use. And the cool thing is the death benefit will always be higher than what it's worth. So when you die, you still have, even if you spent all the money, your heirs still get paid out too, which is pretty neat.
Scott, quick question. So
Yes.
on life, if you have, let's say you take a salary and you get like a net amount for that. Let's say you bring home $100,000 after taxes. And then you also have a business and you have profits from that business. How are you dividing how you put that money? Because some of it's tax deferred, right? Because if you put into whole life your profits, you tax defer the profits. But if you're taking net income, you've already been taxed on it. So
the way it works is more like a Roth, right? So you're not getting tax deductions for putting it in.
Right.
But what happens is that money is not, when you use it properly, it is never going to be taxed, just like a Roth, right? Like a traditional IRA or 401k, you don't pay taxes on it this year. But a Roth IRA, you're using post-tax, you're not getting a tax break on it, but it will never be taxed again for the rest of your life, right? So it's more like a Roth. That's why I call it like a Roth IRA we'll call it peptides. It's a Roth IRA on Samorlin, okay? So that's kind of how they work. Does that explain that?
I think so.
And the nuances, well, yeah. I'm happy to chat with you on it. And that's what I do. I take, if anybody's interested in this, we'll sit down and start building that out. And we'll get a whole picture, like how much should I put in? Really depends on who you are and your business and how stable the income is, all that stuff. If you're not ready, or if it's not the good move for you now, we're not doing it now. But we can do it later, right? And for a lot of people, yeah, you can start it. So I'll go over all the nuances with you and what would be an appropriate amount, right, to do it with.
On your partner insurer, the person that we have insured, the business associate, are you able to transfer that if your business association ends and goes to a different person, or is that policy broke or stuck and then you open a new one?
So are you able to transfer who the insurance is on?
Yeah, like
That has to remain the same. The insured, yeah, that has to remain. So if I got it on Dave, yep, because they've qualified Dave, right? Yep. But it's still useful. And in fact, Dave is no longer with me.
Right.
But what's great, that's okay.
I was wondering if you, so now it's
Yeah. Yeah, so I'm just hoping Dave gets hit by a truck any day, right? for more than one reason. No, I'm kidding. That's mean. It's a joke. Joke for the cameras. I didn't mean that. Don't hold me liable. But the cool thing is, yeah, it gives you permanent protection for your family. Permanent protection for your family. And no, Abu, that's not Larry. Where's Abu at? He thinks all black people look the same. I had to teach him that they don't. You think he would know that? Man, like, come on. It's 2026. You should know this. But it's a way to leave a legacy too, right? I mean, it's a way to hand down wealth because the heirs are going to get this. Whether I die tomorrow or when I'm 80 or 90 or 100, it's going to go to my heirs tax-free, right? And that's a really cool thing because at the end of the day, none of us own anything. We don't own anything. We're renting everything. We're only going to be here for a certain amount of time, and hopefully it's a long life, but anything can happen. And at the end of the day, Tom Plummer, does anybody know Tom Plummer? Awesome dude. He's like the OG teaching, fitness business. He's in his 70s now. But he put it simply like, for him, the purpose of life is just leaving the world a little bit better place than you found it. I think it's awesome. Something I live by. And that's what you can do with this too, right? It's what you can do with it. And my family's protected. My work is not done. But if something happens to me, God forbid, next week, my family's entirely taken care of. Don't have a problem in the world.
Sole owner, 100%. No partner. How do you all of that set it up for like?
Oh, for the business? Oh, that's a bigger question too. Yeah, if you're the sole, like what happens to you? If you're the sole owner when you die, what happens to the business, right? And this is where some of us maybe want to have some conversations with maybe an employee would be somebody who would want to take that over. That's one of the best ways to sell to one of your own employees when you're ready and they're ready. And that, not everybody's going to want that, right? But it can happen. And yeah, or it could be another, because you own Club Plies. This is Lisa, by the way. She owns 3 amazingly profitable gyms, like crazy. But yeah, it could be another gym owner that you have a buy-sell agreement with in the event of death or something like that too. There's a lot of ways. And that's a good question for Matt Becker too. I haven't really looked into that because a lot of mine, like with my gyms, I do have a minority partner who's an owner-operator. That's what allows me to not really worry about my gyms and focus on what I really love to do today, which is this, right? And so like, yeah, what it is with all of those, we have a buy-sell where if I die, they will get it and their insurance policy on me pays out my estate, right? And vice versa, So protect and save, right? So saving is infinite banking as well, but you got stuff in your checking, you got stuff in your savings. HSA is a good savings account for your health stuff, and you need a budget. You can't, I'm not big on like exact budgets, but I like doing a reverse budget where as soon as I'm stable enough on the income, I'm like, cool, I can afford to sweep $1,000 from my business account. I'm going to put it in my checking directly into my high yield savings. So I don't even see it. When the money's there, we spend it, right? It vanishes. So just protect it and do it that way, right? So I call it a sweep account. I just sweep it. I used to do it like at certain points, like whatever's left over, I'll give myself X $1,000 a month for my personal expenses, and all the leftover I'll sweep. Versus you can do a set amount. I don't care what works. If your income is more stable, do a set amount. If you just got to play it month by month, because you have some big months and some, great. Just sweep over the leftover. But be disciplined. If you only need $10,000 a month to live on, just give yourself $10,000 a month. Sweep the rest, okay? It's a good way to protect yourself. Now let's grow, okay? So business profits, some goes to pay down debt, some you save, roll it into your infinite banking, okay? Then when you find cash flowing assets that are good for you to purchase, whether it's growing your own business, expanding to another location, whether it's real estate, whether it's acquiring another business, you're liquid enough because it's not all in a retirement account where you can purchase that asset, right? Which is really neat. And here's the thing, if you are doing, I'm not opposed to any stocks, index funds, all that. I teach how to do that too. It's a very easy way. You don't necessarily need to run it through your infinite banking. You can treat that, just do it directly. But me personally, with where I'm going and what I like to do, real estate and business growth, personally I don't have a whole ton in there. Some people can be different, and that's okay. Personal finance is personal, right? So everybody's blend is a little bit different, but me personally, I don't have a lot in stocks. Infinite banking is where I really shuttle a lot of my money, is the cornerstone of where I build it, so I have a lot of flexibility. Over the years, I've used the money in that to fund additional locations. I've used it to buy our short-term rental vacation house that makes a lot of money. I've used it to buy a couple commercial buildings. When we bought our primary house, like our dream house, instead of selling my old house, I used the money in the policy to put it on the down payment, because I looked at that house. I'm like, man, if I sell it, sure, I can make 270, 280 net. But if I did the math on it and what it brings in from rent and appreciation using 3% on average and amortization every time I pay the mortgage, I get richer, right? And let's not even include the tax benefits, but just those four, that thing makes me 50 grand a year just by having it. So my break even's like 5-ish year, like, let me just keep it. So I used the money in the policy, put it on, there we go, right? I used it to buy Castile Armory, or my share of it, right? And which is my favorite sword manufacturer, which is awesome, right? Because like 5-year-old Scott watching Disney's Robin Hood is living the frickin' dream, right? But it's actually an awesome business. We've grown it a lot, which is really cool. I've used it to help fund a med spa, which I did not actually just with equity, but I actually did it with a financing agreement, just because it was nuanced. She had an esthetician business, and it was just gonna be really messy. So I made sure I created an awesome deal, but she retained equity, but I get royalties too. So it worked out really well. We structured it as a debt, where I'm giving a loan, but I also get a royalty, it worked out really well. There's different ways that you kind of want to buy different businesses. And by the way, my tactics of what I learned from that came from a book recommended some random dude in the coaching group that I was in. And it's gonna make me it is making me a ton of money. Oh, shit. Oh my God, after like 2 days of this, why am I drawing a blank? I'm gonna have to get back to you. It's got a white cover on it. I know that. I don't know. I will have to send it to you later. But it is really good. It's by Justin Donald or McDonald, The Lifestyle Investor. Got it. Nailed it. It's coming. So anyways, like, it's the velocity of money. I'm getting my money to work in many different ways. I'm getting to work in the infinite banking policy, growing it around that 6%, right? And when I invested, like I said, this is what I was saying. You can see I'm making money in these different ways. Cash flow, amortization, appreciation, okay? And it's adding in different ways. So you look like maybe the cash flow on these things is about $82,000 a year, but I'm adding to my net worth over $300,000 a year. That's pretty cool. And then again, flicking over that domino, you just let several years go by. And when I did this math, and I'm like, oh shit, I'm done. Like, I don't have anything to worry about. And then that's when it like clicked for me. I'm like, oh, I can stop being so like up here, all the time, and worrying about business and what's happening and this and that. And this is not including the businesses, right? So those all could vaporize and be blown up. I've got indestructible wealth now. That's awesome. And that allows me to be fearless and do different things. And I really like that. So I wanted to show you an example of what I did in that first deal too with my policy. Show, not tell guy, right? So I opened up that policy in November of 2019, and those two bottom numbers together, that's the $100,000 I put in, okay? You can see 2 months later, I actually pulled out $70,000, okay? And I bought, because I've been looking at Flagstaff. It's less than 2 hours north from here. You're almost 7,000 feet in elevation. You get 4 seasons there, tall, beautiful. It's like you're on a different planet and you drive 2 hours. And like, I love it. And I wanted like my kids to have that experience and go there all the time, right? Because if it's that close, we're gonna go up a lot. And I was so nervous about buying this because if you looked, I pulled that money out in January. However, we didn't close until into March of 2020, right? A little scary because I had just closed on a commercial property in my first gym. I bought the building across the street. I had a really crappy landlord and I got to stick it to him. It was awesome. It's a really good deal too. But I threw out a lot of money on that, okay? And then this was one where like I went up, I was watching, I watched that market for like 2 years. I was on Zillow, I saw this house pull up the same day. I'm like, shit, that's it. Because I knew that market and I was looking at it. I'm like, yep, that's the place. I drove up the next day, convinced them to accept my offer, even though I wasn't pre-qualified, because I wasn't, you know what I mean? I'm just looking. I called my broker on the way back home, and I'm like, you gotta get me qualified. I just put in a deal and somehow got him to accept it without any guarantee. I print out my credit score, all that kind of stuff. And then we closed on it. We closed after a while, because, you know, delays and all that kind of stuff. And then even in March, it was in March, this was just as the NBA was shutting down, because it was the 2 weeks to flatten the curve, and then the NBA announced it was shutting down the season. And it wasn't the broker, because he earns commission. It was the broker's assistant who was on the phone as we were going over details. He's like, are you sure you want to do this? And I just threw out all that money on the down payment, and then this. I'm like, no. But like, I just knew it. You know, that was the fear, the scarcity. But I knew, because I knew that was a deal. I knew it was a deal. And I'm like, okay, Scott, you're scared because you make your sole living with gyms and we're going to be shut down. But I know this is going to be a really good long-term investment. So let's just do this. And so I closed on it. Okay. And it turned out to be awesome. So I bought it for $294, including furniture. Anybody in Arizona knows anything in Flagstaff is going to be way higher than that now. But I put $59K down. I had the rest for some improvements and stuff. But it's worth probably about $615 now. So it's appreciated over like 300 grand. And it's probably spun off maybe 110K in free cash flow. And we've probably stayed there 35, 40 times for free vacations. So it's been pretty awesome. But I was able to do that because I went to the protect and I went to the save. And now I'm able to do that, right? So I was ready for it. I found an amazing deal. I was able to pounce on it. And a year later, I bought another one up there for, I think, 300, a little bit smaller, but I mean, that thing's, I don't know, worth probably like 480 now or 5, I don't know. So, but I was ready for it. And the cool thing is because I put it in the infinite banking policy, I get to earn a return, not just the real estate, but also in there over the long haul. And it just makes a big difference. It's velocity of money. Get your money working in multiple ways for you. So these policies are phenomenal, okay? But they're not all equal. They can be designed and built really differently, and you need somebody who knows what they're doing, and you need somebody who's going to build it in your interest, right? Who's going to design it how it needs to be for that cash value for you. There's a big difference in these things. I had mine, and it was apples and oranges. I had one built and another one built. And apples to apples, the cash value to me was over $2 million difference over like the next 30 or 40 years. $2 million. And that's not the only one, okay? When I started teaching this, and then this is why I eventually then got licensed, because I looked at some of these. T. Hutch, which your new name after Wednesday was what, Lil Crispy? Lil Crispy? We looked at one of his policies and what he was putting into it, how he was doing it, and it wasn't, even if we, conservatively, because you were putting much more money into it over the long haul too, but even without, we just took his and rolled it into a better one, and he's gonna have over $1 million more in cash, just doing that. Yeah, at 65. So by the time you're 75, 85, 90, you're a specimen, so you're probably gonna live to like 130. It's gonna be $3-4 million that we just made him from doing that. And I did all my shit on the back end, which was a pain in the butt. That was my first exchange. Gary helped me out with it. It's not fun to do that on my end, but it did. But he's gonna have millions of dollars more from that. Right? And he would have never known it. He did the right thing by getting a policy like that. Great. But that's not optimal. That's the value of this stuff, guys. One talk that we had, yeah, we got to fix this. Let me see what I can do about it. Boom, boom, boom. You know, a couple weeks later, hey, here's $3 million over the course of your lifetime. How does that even happen? That's why I'm teaching this stuff. I know finance is not the most exciting thing in the world. Nothing bigger that could change your life, though. I mean, when I was even growing up, it's like, I feel like, you know, your fitness is, your physical fitness is one of the most important things to live an enjoyable life. So is your financial fitness. So I don't know. Ironically, I just do both for a living, right? So, but anyways, infinite banking, it's amazing. There's so many pros about it. The cons, not if you have big medical conditions though, you might not be able to qualify, right? I'll let you know. Like you go through underwriting. Sometimes it just makes it a little bit more expensive. And if it's really bad, you might not be insurable, right? That's another reason to try to get at least term now, term convertible, because it locks it in and you can turn it into one of these. If something turns south in your health, you might not be able to get this stuff. And that happened to me. So one of my operators, young, healthy as shit, right? But we got insurance policies on each other, right? I got it convertible. So did he, because I told him to, right? He, and it might be vaccine injury, we don't know, but they have no rhyme or reason. That's the only thing that makes sense. But he's got really bad pericarditis. He got like 3 or 4 of the vaccines, and he got pericarditis. He's been laid up in the hospital for like a week to 2 weeks multiple times. He's younger than I am. Amazing shape. And thankfully, they got him admitted to Mayo, and thankfully, they got him approved for a new drug, and it's under control. But holy shit, like I didn't know if he was going to die. He didn't know if he was going to die. Extremely scary stuff. And thank God he got a whole life policy on himself, and I got a term convertible on him, because that happens. Yeah, most insurance companies probably aren't going to touch you. And I think he was 39 when that hit. Maybe even 38. So anyways, like, and yeah, if you don't have disposable income or it's not stable, maybe just the term convertible now and not that. But I'm happy to walk anybody through it if it's appropriate. How am I doing on time, Andy? I'm doing good? I can't read these when I'm up here. 45 minutes left? Total, in total? Or an hour and 45? Okay, you got it. All right. Stocks, bonds, index funds, all that kind of stuff. You want to hold these in tax advantage accounts usually, right? But the con of that is that they're not liquid. But they're really easy. I mean, it's really easy to do this. Quite often you can do it yourself. You can get a wealth advisor as well, as long as you really check their fees. A lot of them rake you over the coals and you don't even really know it. Anybody have an Edward Jones guy? So you're like, uh-oh, shit. Usually they're not the best. I would about give you a 99.9% chance he's got you in American funds, index funds. I bet you. Because they have massive sales loads on there. They get massive kickbacks from that company. It's an actively managed fund that you probably don't. Anyways, I am not a licensed wealth advisor, but but, so, I mean, you already signed up anyway, so we'll take a look at that. Not the first thing, we'll take the business stuff, and then we'll take a look, and I'll recommend anything that you may or may not want to do. But yeah, it's a thing like your CPA. You can't just hand it off and just trust that they're going to look out for your best interest and do the best job. You can't. You need to learn this stuff, okay? It's very easy, though. It is actually incredibly simple. Nobody in here is a Warren Buffett. We're not going to be a Warren Buffett. You don't need to be a genius at picking stocks and watching tickers. But there's a really easy way you can really outperform almost anything by doing nothing. I mean, it sounds crazy, but it's just the system is set up to extract as much wealth as they can from you, period, okay? So you need to learn yourself. The cons of it is volatile, right? It'll do great over the long haul. Do not sell when it's in a recession. That's the only way to lose. It's a long play, okay? But the great thing is you can get in for very little money. It's very easy to do, right? And it's a great long-term tool. So when we buy cash flowing assets, I think I put this a little bit, oh yeah, no, this is the right order. Sometimes you need to acquire debt to get them too. Sometimes you pay cash for it. Sometimes you might need to acquire debt, like real estate, right? Not many people are investing in real estate putting all cash down, because you can make more money. If you paid all cash for one place versus you put down payments on 3 places, your returns will be so much greater over the long haul buying 3. Use leverage, use other people's money, just like banks do, right? So sometimes you need to acquire debt. Anybody need to get debt to open up their business? Yeah. I mean, I wouldn't be in business if remember I had $5,000 in seller financing, 25 grand in seller. If I didn't assume that debt, I wouldn't be here today, right? That is a double-edged sword, but when you're using it for something, a productive method, it's how you get wealthy, right? But real estate is one of the biggest examples of how you can do that. You're getting mortgages on these things, but it gives you mailbox money. There's me sleeping, right? Making money. I get a rent check coming in at $3,000, right? A month. That's great. Okay? But real estate, you earn money in multiple ways. It can be there's a lot of tax advantages. It's highly leveraged. So you buy an asset, putting 25% down or even less sometimes, and you're getting an asset worth way more than that. So the appreciation is on the whole asset, not your cash. And there's a lot of factors in this. Andy shared his story, right? He started house hacking. There he is. His first house was house hacking. He didn't even have a mortgage for years. He hasn't had a mortgage in how long?
I haven't paid a mortgage in 14 years. Well, I mean, I've paid my mortgage, but I haven't had to actually put any money into it because I had a 3-family that lived in one of the units, 2 units paid for it. I now bought a 2-family last year. That unit pays for that mortgage plus the unit for the other one. So I haven't had to actually put money into a mortgage in over 14 years. And both properties have already appreciated. The first one, when I bought it for just under $500,000, about $429, it's now worth about $1 million. So it's doubled in value. And then the other one has already appreciated about $10,000 to $20,000. So
It's like a guaranteed appreciating asset.
Absolutely. And when you do a multifamily that's like 2, 3, 4 units, a lot of times you can put down like 3.5%, right? Down payment. If you're willing to house hack like that and you live in it, you rent out the other ones, and you did that again, you don't need to be socking away $100,000 to build wealth. You don't, right? Like anybody could do that. That's pretty awesome. It's pretty awesome. So you just got to do it, right? You got to learn how to do it, then you got to do it. But yeah, cons are sometimes if you're not house hacking, you might have to put 20% down into a deal. So it's harder to get into real estate sometimes. But with mine, I did the vacation homes, and I think I only put 10%
On your second house,
on my second house.
it was not a.
Maybe 15. Let's see. No, I put 60 total, right? 60 total. So maybe I'm wrong. 60 out of 300. Was that 20% then? Yes, sir. Okay, 20%. I was wrong on that.
They made me do 25 on my
Did they?
on my STR because I'm not.
Oh yeah. We got it with the vacation, which got us down. Yeah. So there's a lot of different ways to do these kind of loans, and sometimes you find a really good mortgage broker who crushes it for. Yeah, we pulled the tricks. Yeah. I got a really good guy for that. When I refied them all when it was rock bottom rates at like January 2021, all of the properties, and he pulled a really cool trick because taxes were a mess because of COVID and all that kind of stuff. We did a really cool thing. Oh, I used my infinite banking policy for that. We had to set up a temporary trust, and I had to put a bunch of money into it, and we used the asset depletion method instead of income. So I took money from infinite banking, put it in there, and I took it from like a business and put it in there, refied it all, and then put the money back. Digging your well before you're thirsty. And now like my primary mortgage is like 2.7. The vacation ones are like 3. It's ridiculous. The SBA 504 loan I have on the gym that I bought, the building, the SBA portion of it is at 1.675% interest rate. Crazy. That one I'm never paying off. It would be foolish, right? Acquisitions I've viewed, right? Obviously I've bought it with acquisitions. You can grow with that, but be careful investing in other businesses because it can be the Wild West. People can bail on you. You're right. Don't invest in Prestige Worldwide. Wide. One of my favorite movies is hilarious. But you can invest in other businesses, but you have to be a little bit careful. It can be lucrative, right? But you are investing in the person too, and anything can happen, right? So you can have massive outsized returns because, The Lifestyle Investor, really good book if you want to kind of get interested in that. Not people shouldn't do it, depending on where you're at right now. Save that for later. Write it down, but save it for later. It can be fun. It can be rewarding, right? I have a sword company. That's the coolest thing in the world to me and me alone. But yeah, it can be riskier, all those kind of things. And there's also private lending. You can use your money and lend it out to other people. Like I said, in that med spa, the way it was going to be really messy on it, I needed a way to kind of guarantee my retainers a little bit more. And the way you do your taxes, it can be difficult it was just going to be messy. So somebody was short trying to open or buy an existing med spa, so I structured it as a loan, but I also got royalties on it, and it's actually going to be an insanely profitable deal for me, and I helped her get into the business, which is really cool. So you can kind of do private lending in different ways. You can put your money in a hard money fund and get 10%. There's a lot of different things you can do. But those are like the main ways you can invest, right? Main ways you can invest, you can do any which one. But assets, again, it's not just about money. So I like to call these lifestyle assets, right? When I bought the place in Flagstaff, has it made me several $100,000? Well, I mean, yeah, almost $500,000 probably when you add up all the different things. Yeah, but we've stayed there, like I said, like 40 times, right? It's a 4-season place. It's awesome. They have an underground cave a mile long. It's crazy. Like they have everything up there. It's by the Grand Canyon. Like I wanted that not for the financial gain. I wanted that for our family, right? Our house, yeah. I mean, your house is kind of an asset. Robert Kiyosaki will tell you it's not, and he's not wrong either. But like, I wanted to buy an amazing home with a pool, right, and a spa, and like right on the mountains where we go on the trails, and be able to be in a place where we can raise our kids. That's an investment, not like, you know, we could have done better by getting a smaller house or whatever it is, but like that's an investment in our family and our lifestyle. That's really important. And obviously don't get in a bad situation with it. But remember when I said like, spend the money on the things that you actually value. And my wife valued that more than I did. But you know what? I have a huge office, which is great because I'm just like walking around talking to people, right? And it's great. I can spread out. I don't have to get an office somewhere separate. It's totally separate. It's like 370 square feet. It's awesome. Like that's a big investment because I spend a lot of time in there, right? Castile Armory. Yeah, I'm going to make sure it serves me financially, but at the same time, like I love it, right? It adds more to my life than just, there's a reason I didn't choose that business to be the most profitable business to invest in. I did it because I loved it. It's a lifestyle asset for me. And then I get to write off all my sword tournaments and travel, which is great. So anyways, that's the cycle because you take your profits, right? Some goes to pay down debt, some you park temporarily in a high yield savings, then put it in your own private bank with an infinite banking policy. Then when you find cash flowing assets that are great, you can buy them, whether they're your own businesses or others or whatever it is. That increases your income, increases your profits, and you just do that a few times. Like I said, I just did that, just with the real estate 5 times. And I don't have to worry about retirement. Instead of saving and socking away millions and millions and millions of dollars and hope it doesn't run out before I die. I have assets that produce income every month. And I just don't have to worry about it. So one thing too, when we talk about growth, right, you may need to use debt to grow as well, right? Whether it's your business or real estate or whatever it is, you need to learn the tricks to raise your credit score and game that system. The key is learning how to be lendable as a business and personally. This I know intimately because I screwed everything up. I know how to hack the credit, all the hook credit game. And like this guy, Cody, awesome kick-ass gym owner in Georgia. He has a fully paid off house. He did an amazing land deal. His net worth is awesome, right? No mortgage. But he was just the Dave Ramsey thing. So he was like a ghost, and we found 2 blemishes on he had 1 credit card for $3,000. He paid it off every month. It was like $2,000 something. So his utilization went high. He's got nothing else. He had 2 weird dings from like a medical bill he never got for like $200 and one other thing. His credit score was 444. Banks look at him as like the worst person alive, and he's the most fiscally responsible, well-off person. Because that's the game. That's the game. So we did in 1 month, we did a few things. We disputed a couple things, and we did a couple tricks to get him some more different things, raised by 253 points. I don't know what it's at now, but I think it's closer to like mid to high 700s. I need to really update this. But he did that in just like a month, just doing a few things. I can't remember who else just did this with, but it was phenomenal as well. And then you can actually get the business loan that you need or whatever it is, right? And mine is an 849 out of 850 now, when it was as low as you could get before, okay? Know how to game the system. I know how to get the loans. I know how to get clever with banks because I had to be. You know how long some of that stuff took to get off my record? And even, it falls off after 7 years, some of it, right? I got some cleared earlier, but even bankruptcies, or not bankruptcies, foreclosures. Like sometimes stuff doesn't get processed for 2 years later, and it's on there for 10 years. Like it's different. Even if it's not on your credit report, if you're trying to qualify for a mortgage, it shows up. So like there's tricks, but if I can do it, you can, absolutely. So that's it, guys. Protect, save, then grow. And the cool thing is your infinite banking policy does all three and keeps your options way open and liquid, which is awesome. And again, you don't have to just get it on yourself either. You can get it on your wife, you can get it on your husband, you can get it on your kids. That's instead of a 529 college savings fund, because I don't know if they're going to college or not. They may or they may not, right? Depends on what route we go. We don't just have to use it for that. College might be free then, who knows? So who knows? And so it revolves around this, and you need to have tax savings, not just on the income side, but your investments will also offset that, really minimizing that. Okay, everybody get out your phone. I need your help. And then this is actually how you can, if you want me to reach out, I can reach out then. So because I want to survey a large group like this, because I talk to individuals, but it's hard for me to aggregate data. And like, who has term insurance? Who has whole insurance? Do you know if you have enough or not? There's like 4 questions on there. There's like 4 questions on there, maybe 5, I don't even know. But I wanted to get some data and information from you and aggregate that data. Because I'm curious to know, especially in a room with like fitness entrepreneurs, med spa owners, gym owners. It'll take you like, raise your hand when you first finish it, because I think it's like, yeah, you got it done already. It's really quick, right? And then you are all registered for, like through the tickets, through my system, so I'll know who it is. And like you can text that number that you're getting like the updates for. If you want to say, hey, can you look at my policy, or I don't have one, or can I talk to you about that? You can actually just text that number. And I'll be happy to do that with you.
Do you have time for a couple?
Yeah.
Kind of going back to the tax stuff. So, this might take off the tax guru.
I'm not. I just like to learn.
So I just did a renovation of my home, and like included in that was a home office. I have 2 locations, so like I have this computer to do it. But I'm wondering, is there a way to write off a portion of that rental, let's just say it was $100,000, is there a way to write off?
Home improvements should be a way to be tax deductible, depending on what they are.
And then
Talk
the
to your
home
CPA.
office aspect of it is immaterial.
Do you write off home office? Like,
I am now.
do you do work in your home?
Sure.
Then you have a home office. Dedicate a specific area for that, and you can argue that, yeah.
Yeah. Is there a way to write up the amount of the location, like square footage, or is it?
That I'm not sure.
That's a CPA question too, for sure. Because I don't know that off the top of my head. And I'm sure it's nuanced, and I would probably ask ChatGPT and ask your CPA. Keep them honest. Or if you don't have a good one, hook up with her husband too.
Then second, it's just an interesting way that I found a way to, I bought a vacation rental that's.
Yeah, by the way, we talk about this stuff every week, right? Not just business, but wealth and legacy. Yeah. Congrats to you for buying a vacation home, which kicks ass. About an hour away from your house, I think. That's a phenomenal deal. Awesome.
So I found a way to use my fitness business and pump some revenue into there and kind of save my tax too. I'm actually offering it up for a 3-day to my challenge winners from both of my fitness locations. And then my business will pay for that. Is that legit?
That I don't know.
So what, if you have your business doing it, like your business would pay the LLC there, but that will be taxable on the right? But sometimes that can be a good play because you offset income from the property against the depreciation. So that can be useful depending on what situation.
It might just be enough to help that property break even.
Yeah, exactly. Yep. So yeah, you can play a lot of games. But guys, the fastest way to increase wealth, the fastest way is by taking your business seriously. You're not creating it out of nothing. And so when I got really serious about my business and I learned from everybody and did everything and took all the risks and did the things and took it seriously, that is the catalyst that helped me out of that. It's the cash flow from the business. It'll greatly accelerate what you're able to invest and how you're able to make that happen. So it's first step, right, is build that dream business where you're making the money to live the life you want and to create the wealth that you want, and making sure you're not burning all your time, right? Making sure you're living life. But build your dream business, make those big, sexy profits, do the right thing, and turn that into indestructible wealth. That will help you live the lifestyle that you want. Make sense? So I did, and several of you did this too, I actually did an 18-hour live course on, because there's a lot. You have to learn how banks work, right? You have to learn how they lend. You have to learn how they make money to understand it. You have to learn how your wealth advisor might charge you and why they charge you and how they could be ripping you off and what to do and what not to do. There's so much to understand about this that after one event that I spoke at, I did like a 3-day seminar to see, and I'm like, does anybody want to come on for 18 weeks? I'm going to teach you about an hour a week at a time, give you all the financial calculators and everything, and teach you all this stuff, educate you financially, because this financial education took me years to learn. Many, many books, a lot of things. And I built all the calculators somebody needs to really figure things out and do it and track your assets and track your cash flows. And so anyways, we did that for 18 weeks, and then I wrapped it into an awesome course. So it's going to take you a while to get through, but it has all the tools and stuff as well. And for those of you who have already we're going to work together in whatever capacity, I'm just rolling that in too. So you're going to get that. So we talked about your Edward Jones stuff and everything like that. We're going to it's not going to be the first step, but maybe after a few months, okay, let's start going through that course, and I especially want you to watch it, right? And we'll dial that in. But that's just going to be included, as well as the fact that you're going to come on those calls that I do weekly, where we do talk about the higher level business things and wealth, and then we'll dive into your stuff personally. Okay, I will dive into it with you as well. So anybody doing that, I'm just throwing that in because sooner or later you need to do it, and I'm happy to help you. I can't spend 18 hours teaching you everything, but I've got that for it, and then I'm going to help you implement what's the best strategy for you. Okay, and which is different for you. We got to look at where you're going in life, what you want out of life, and where your risks and where your family are and all that kind of stuff. So you're just going to get that included. So yeah, it'll be great. But yeah, I mean, at the end of the day, the value assigned to something like that, well, if you're a boo, it's, let's say 30 grand a year, let's just say 5 years, that's probably worth $150,000, right? At the least. He's also set up an infinite bank policy, so probably more than that. If you're Taylor, by the time you're 65, it's worth $1 million, but when he's 90, it's like, I don't know, 3.5, something like that. But it's just going to be included free. So that's done for you. Remember, those of you who are turning in, have not yet turned it in, but want to, turn them into me, your commitment letters, if you want to do it. But some of you, I had some conversations last night, and you had some questions on it. Because for some of you guys, you were talking to me like, cool, I need your help, but like, I don't need some of that, or I need something different. And there's a lot of conversations I had. A few of it was like on just cash flow, like you're starting out or you're struggling, and like I want to do it, but I have no idea even where to like start and how to start getting it. So it's a discussion on what assets and what's your sphere of influence and what market are we hitting for you and getting going. Somebody also was like, I suck at converting. And so we started talking about that, and she's like, no, I'm already doing that. I'm okay, well, walk me through your process. I do this, okay, that's good. I do that, that's good. You could add that, oh, I already do that, good. That one, I'm like, that's good, that's good. And then she mentioned one thing, I'm like, that's where you're fucking up. You did one thing, you're breaking it, you're not gonna get anything. And like, it's very nuanced. So like, what I wanna stress is that what we do is a lot of one-on-one. Like, we have the courses, the supporting materials, but like, it's very nuanced. I like to give the analogy of just boxing. The world champions are throwing the same punches. They have the same footwork and tactics and everything as an amateur boxer. But what separates just a regular boxer and a world champion is just they're executing at a much higher level. Sometimes it's just the little nuances, the timing, the slip, the recognizing a pattern, just shifting a little bit. Bottom line is like black belts, really at the highest level, are executing the same damn moves as a white belt. They're just doing it at a black belt level. So what else happened? Some people are just, I need very specific help on marketing. Some of you have opportunities to sell one-to-many on a webinar or an in-person seminar. Chiropractor I've got these supplements, I have these YouTubes that leads to this online affiliate thing, but I have their emails and they're already buying tons of supplements. I get like 100 new customers. I'm like, holy shit. Let's attack that. People have unique assets. Every business is different. And so I look at what your strengths are and develop a plan to just crush it, right? And it's pretty cool because some of you have just money sitting there, you just don't even know it. And then some of you have said, hey, I really need your help building wealth and infinite bank or whatever it is and starting to take profits and doing the right things with it. So I had a lot of conversations. I want to assure you that when you do this, like I know it's confusing. I threw up a ton of shit. And you're like, oh, I might not need half of that. And some of you are like, no, I need that. Let's go. But I just need this or that. I want to stress that that's a good 4 months of one-on-one. And we can spend some of it on high ticket, but we can spend a lot on others. But also, what I want to make sure of is some of you are like, I just need help with this specific thing, or I need this, or whatever it is. And so what I wanted to make sure of is like, I don't want you buying something that you don't think you totally need or is a perfect fit, if that's you, or you just have this one thing. And so if there's something, there's just a lot of those conversations. And so like, if you need help with something and you're not sure if that's the exact solution with all of that you're getting, just use that QR code and scan it now for me so you have it. But you can hop on a 30-minute call and tell me about your situation and where you're at and what you need help with. Some of you have already been through high ticket launch like 4 years ago, but need help with other things. So like, can I talk to you offline after, like Sydney, right? Yes, let's figure out what you need and what help you need and we'll dial it in, right? So there's a lot of you like that and I couldn't talk to everybody. So just scan that and just book a time with me. It's as simple as that, okay? So I want you to feel very comfortable with this kind of stuff. And for those of you that are handing in the commitment letters, definitely bring them up. Insane bonuses, you're just gonna get a lot for this and it's gonna be pretty awesome. And again, 1 to 2 clients, there's your ROI.
I just wanted to kind of personally share, I just started working with Andy and Scott and I made already $9,600 in new business and we just rolled out my future system and I met Scott at a different seminar, connected, hopped on a call with him and he said, yeah, you're right there. You just need to switch a few things and that's really what it was. And now at this seminar, I'm realizing I need to fix some onboarding stuff. So now my next call with Andy is going to be fixing that. So if you're on the cusp of it, just at least get on the phone with Scott or Andy or whoever. With these guys, it's worth at least a phone call to see. And I'll be honest, I did not have money to even hire them as a coach, but I made it work and I've already paid for it. So
Nice.
I appreciate it.
Thank you, man. Appreciate that. Appreciate that. And he's an independent trainer. You know, it's just, he's paying rent at a place. It's not like he's got a lot of these different tools. He doesn't have and you can just do a lot. And it's just, again, sometimes we don't need to do everything in the kitchen sink because we're going to look at like, what is the biggest bottleneck that we can clear the easiest that's going to get you the biggest growth. And then, and then what's the next biggest bottleneck that we got to clear? And you just move those chains 10 yards at a time and you can go so freaking far, so fast when you just do that. But I mean, I did it for my first 6 years by myself. It was really slow going. You know what I mean? Until I finally hired and I just started going up and you know, it just works.
All right, I'll share mine. I'm not working with Scott yet, but I met Scott at a seminar and I bought one of his ebooks with the ticket and I kid you not, like it works. I tried it out to where didn't sell for $2,000 to $3,000 as he had mentioned, but I just wanted to test it out and I the highest I sold was an 8-week program and I sold it for $1,500 and I sold a few of those. So it just comes down to like you just have to implement it.
Thank you, Boo.
You just have to implement it and just believe of what he's instructing us to do and get out of that mindset of thinking that people are not going to pay you that much, right? And the thing is that they will pay you if you frame it in a way to where that you're selling them the vacation, right? And the biggest thing where I took out of it, where you frame it, is where that you're not just selling the 3 times a week that they're training with you. It's the other 165 hours in that week that they need that's going to get them over that hump, right? And that comes down to habits, nutrition, routines, daily movement, mindset. And when you frame that around, that's what you're selling. So I just wanted to share that.
Appreciate that. Thank you.
I've got a long way to go, and I've been ghosting Andy for.
Not person anymore.
Like my normal thing is like 150, 175, and I just half-assed, to be honest with you, half-assed what their program is, and sold the first one for $1,200, and was shocked, and I was like, oh shit. And the next one was $1,500, and now the last several, Andy was like, well, we just need butts and seats, let's just do the least expensive one. But now that I have seen the results that the people are getting, and the fact that they're absolutely thrilled and they're getting lasting results, I know what they need and what they came in for. Like Andy's saying, sell them what they need or what they want. And then, but now my norm seems to be that $1,500, even though we're aiming for just butts and seats at 175, but they're buying the $1,500 as the norm, and that's kind of turning back into my lower level, and I'm just shocked, and I'm the fulfillment is way easier, because I honestly bought your stuff and I was trying to get a Frankenstein and half-ass it, and because I need the money, but I went ahead and took the plunge, and everything is turnkey, and it's way easier, and everybody's happier. Everybody's actually getting what they want. And it's been great.
Yeah, and you work with the people that you want to work with. That don't.
Yes. Yes.
Sections.
Yes.
And these people that I signed for that amount, that I got a few of them right now, they're out on business trial like I am. They're not texting me telling me, hey, when can I make up my session?
Yes.
No, like I say, it just makes it much easier with the people that you want to work with.
They're not the squeaky wheel.
Exactly.
They're appreciative, and they're getting screaming crazy results,
Yes.
and happy as can be. It's amazing.
That's before you've added that Asher component,
Yes.
right? And
Yes.
I've been working with Scott as a fellow gym owner, but also.
He runs my, you saw what he does, right? So he runs my stuff. He manages all that.
These ticket items that everyone's referencing is before you've added a medical care service program, and they just double it, triple it, right? Like it's, anyways.
Yeah, don't forget, guys, I'm building all of that acquisition stuff out on that and the packages. And this, I've just not seen a bigger opportunity in my entire 16, 17 years in this industry. It is, like when you're, the early adopters, and then like we are riding up that. And if you get on that, like, I don't think you understand. Like, you kind of saw what happened. I throws. Okay, I'm doing okay. Shit, horrible. And then did high ticket, and then everything changed in my life. And I had all the money to do these things, and right, and it changed. This is this on peptides, right? Like, wow. It's and hey, listen, again, if you don't believe in it or anything like that yet, great, don't sell it. But man, I think a lot of us are really coming around to it, and holy cow, is it exceptional. And that's why I'm taking it myself, and I'm like, wow. So it's pretty awesome. Yes.
Just that, for me, knowing what you love, knowing your why, knowing what you're passionate about, and you're ecstatic to see people come in your door, they could go anywhere, right? They chose you. And then they come back again and again. And when you don't lose that, you're not thinking sales so much, you're thinking service, right?
Yeah.
And they're coming in for you to solve the problem. I didn't pay attention to the money, which is why I'm here. Just so I can learn all about financial stuff as well. But I think that we get kind of caught up in the people that work for us and look at goals and quotas and spreadsheets and the numbers. But when you celebrate what they're bringing to the team and they are seen, then they love where they work, and they're going to love the members that come to your business, right? So that's the only reason I'm still in the business, because of the community and the culture.
And that's why we got into the business in this first place. We want to help people. And again, it's not that easy sometimes to help people, because business is hard. Business in this industry is really hard, and sometimes we fall out of love with our businesses too when we're going through the hard periods of time. I mean, I've done it, and we stop finding the joy in it. But like when you get it stable, you don't have to worry about the money. It's very, very enjoyable.
Back up.
Yes.
How long is this 8,000 for? Is it, you said 4 months?
So yeah, yeah, I did a terrible job with that, by the way. I'll just, but yes, because what we're doing is we usually go through a high ticket launch for 8 weeks. Now, it could take somebody, we might not even get to that if you don't want to get to that right away, but, and then we added on 2 more months of one-on-one as well. So it's all one-on-one, but we can meet as often as needed, right? Some people are like, cool, I can meet once every 2, 3, 4 weeks because I got this stuff going on and my direction, and some people are like that, right? For others, we got to dig out of a hole. And we got to figure out what's going on with and we need to meet more often, right? Typically when we're doing a high ticket launch, we're meeting quite often because we're going to build it to your business, and we're doing that and all that kind of stuff. And then over time, it might be every couple weeks, just depends. But we'll get one-on-one for 4 months out of this. 4 months out of this. And it's not about our agenda and what we want to take you through. It's about you and your business, what needs to be done and when, period. Right? Like, there's a Orange Theory Fitness who has an 8-week challenge. She's with Asher too. She's just not here. She's in Chicago. The pipe burst and flooded the whole thing. But wow, what an opportunity, because they do their big push. They get in outside members, but also inside members. And it's an 8-week thing. And they're going to do an in-person kind of like kickoff. And then she's got her Yellow Birdie Wellness thing. And so oh my God, we're going to crush it with that. She has an audience of, there's probably going to be 70, 80 people there. We're designing, what is that perfect seminar? How many could you convert? What is the right call to action to put there and get it done? It's similar to how we did. We only had a phone call, but he's just like, yeah, I want to start with you. He had a nutrition seminar at a jiu-jitsu place tomorrow. I'm like, cool. It's Friday at 4 or 5 p.m.
It's 5 p.m. We sat on the phone for literally an hour, and you were like, okay. I had a whole prezo already set up, and I kind of ran through it with Scott, and he's like, change this. And it was actually my first presentation, my first seminar on my own. I was with another business partner also. Anyways, just that couple hours, I had 17 consults from the jiu-jitsu seminar. And so he was like, hey, call me, text me as soon as you're done. I want to hear how it goes. I let him know. He's like, beautiful. Let's get back on a call and let's figure out how we can help you out. And my thing was cash flow. I was undercharging, over providing service, type of stuff. And I kept telling him, I don't know how to ask for more money with not really adding more value. So my calls with Andy have been every week, and we just, exactly what he took us through today with building the dream client, and then taking what Scott has taught us about the high ticket, and now I offer online coaching, in-person coaching, and I have 3-tier systems. And I'm not gonna lie, that first consult with the new prices is like, oh man, I don't know. I'm asking for almost quadruple what I normally charge. No sweat. They signed up, and like I said, it added $9,600 worth of new business, and I was just like, oh man, okay, cool. This shit works. you just gotta run the play. Just like we tell our clients, right? Or our patients, or whatever our business is, you just trust us and trust the plan, it works. So
yeah,
I really appreciate, man.
Yeah, that was before we officially worked together.
Yeah.
I'm like, what do you have planned for tomorrow then for that? I'm like, cool, don't do any of that.
Yeah. I did that because I was up, on ChatGPT and writing out what I knew, and I'm just like, all right, man, I feel pretty good about this. Okay. And then let's throw this out. And here's what it was, though. What Andy said today, he simplified it. I had it so much more complicated, and Scott just simplified it. And again, I truly believe that because of that, I was able to get more people interested. And like I said, I got 17 consults of it, and these are people that I do jiu-jitsu with now on a regular basis. But at the time, I was just kind of starting out. So there was no trust, there was no rapport built there. And now I, on a regular basis, after every so often the class will be like, hey, I'm gonna message you tomorrow because I need to fix something, you know, and it's because they just got choked out like 30 minutes ago. So like now it's a somewhat of a constant funnel. I have about 6 clients just from my jiu-jitsu gym alone.
That's awesome.
Yeah.
That's really good.
Yeah.
That's really good. And yeah, what was good? You'd get lucky to get 1 to 2 with what you had planned. Yeah.
I had like probably just, it was a lot of nuance. It was a lot of just like repetitive, like just stuff that just like fluff. And we just put the nuts and bolts and
A
just
confused
kind of,
mindset.
Simple works. Yeah.
exactly.
Absolutely.
And looking back at it, that's exactly what it would have done. A room full of you guys, you probably would have appreciated it, right? 'Cause you guys would have understood what the hell I was talking about. But
That's the issue. We're the nerds. And we want to teach all the shit that people don't care about. It's just like what Andy's whole presentation was about, right? Absolutely.
So I've had a presentation for the health and wellness treatment, let's say at the end of the month, I'm scheduled the 27th. So that was to be something you'd be able to help me with
Oh, yes.
together, so with
Yes.
sign up with you.
Absolutely. And that's what I want to stress. Like, guys, this is not bullshit stuff that, you know, I didn't want to get into I was having the conversation with Matt Becker about how I got into this and how I didn't mean to become a business coach at all. I did not. It happened totally by accident. I was actually in another mentorship program. I brought this to the guy, you know, and people were asking in there like, what the hell are you doing to get these results? And I'm like, well, this is what I'm doing. And then they started getting really good results. And I brought it to the guy. I'm like, hey, listen, your people are freaking broken here. Like broke. Your average person, you know what I mean, is not making money. Like this could really help them. But he didn't, and I didn't want to do this. Like, can I just do this? Can we find a way I can do this under your umbrella? I don't want to do this shit, you know, but your people need it. He was really threatened by it because it wasn't his idea. And it was, you know what I mean? It was one of those things. I'm like, what? And there was like, at that time, there was 600-700 gyms in this thing. I didn't know it at the time. I was actually the #1 revenue and profit person in the entire organization, which means I was in the wrong room, right? But I brought him like, dude, this could help your people. I thought your mission was helping 1 million gym owners become wealthy. That's bullshit. Like, I'm not trying to steer, I'm trying to do this under, you know what I mean? It was just bizarre. But anyways, you know, enough people like knew about it then. And then they just like, can you help me with it? And that's why I'm like, well, I'm not your model, but like, yeah, let me work with you. And it just became a thing then. I worked with like 3 or 4 people. And then those 3 or 4 told, you know, the next 10. And I guess I'm a greasy business coach. I don't know. Yeah, I didn't mean to do it because you know what it's like. You know the greasy stuff out there, and I never wanted to. That's why I didn't want to get in the space in the first place. But it just happened, kind of organically.
it's because you, Andy, and Taylor, I haven't had a conversation with you, but I know if you're working with Andy and Scott, like they truly just cared. Like Scott knows about my family. He'll ask about how my kids are, how my weekend was. Like it's not just business. Like he truly cares about me and where my success is at. He's even hopped on a phone call with me about partnering with him on a gym locally because I'm out here and we're still kind of working that out, but like that's how much he wants to see whoever's willing to trust him win. And again, you don't see that, especially in our industry. It's cutthroat, it's dog eat dog, everyone for themselves. And when you have a business coach that truly cares more about your money and your pocket than in his own, it truly shows, and it makes a huge difference in your confidence and your ability to present yourself out in your market.
And I'm thinking about
Thank you.
I was going through a really tough time, going through a divorce, and met Scott, and I definitely wasn't in the right mindset, but I signed up, he was patient with me, and I sent out some emails that I really didn't want to send, and I pulled out probably about 10K from those emails, and I'll tell you, I didn't even do half the stuff that he asked me to do. My sales manager, not only did it make a huge impact on me, but also my sales manager was like, this sales portion is fucking incredible. It changed the way that we sell it at my gym. And I'm in New York City, and Scott was like, how are you not fucking selling high ticket right now? You're in the Upper East Side, there's so much money, and I'm just at the tip of the iceberg right now. And he's been so patient with me. It's been awesome. And now with the Acromed stuff, I mean, I think it's gonna be incredible.
Oh,
Yeah, and
it's gonna be
Nolan's the GOAT
sick.
in NYC, by the way, too. So I was wondering.
Yeah.
He is the GOAT in NYC. Yeah.
One thing that's helpful is you guys aren't pushing somebody else's program on me or on you. It's like, what have you got going? And I've done it with another organization, and they were great. But it was I have a hard schedule, and you guys stretched it out and were patient and persistent and
Yeah, we chase you down.
but you're not jamming me into a square hole. You know, you're saying, hey, what is your shape? You're asking what I want to do and what I do, instead of making me turn into something.
Yes. Yes. A lot of things just make you run a program to a T, and you're like, I don't feel good about that, or I can, or whatever. I hate that. And you can't. It just doesn't work for most gyms, right? And everybody's got to work at a different pace. I mean, at least like different things going on. We're going to work with your limitations, the time or the fulfillment, whatever it is. You know.
This is the question I was going to ask him. Gentleman back there, what's your name, man?
Noah.
Noam, nice to meet you. My name is Enrique. You kind of touched base on the question I wanted to ask is, how do we get our trainers on board with this? I mean, we're the ones going to these conferences, right?
Yeah.
In a particular situation where we attend conferences where it's huge, multi-million-dollar businesses, or we attend conferences where it's boutique, brick and mortar, and we're a little bit bigger than that.
Yeah.
We don't train in our gyms. We're owner operators. We have general managers, we have personal trainers. They're not sales managers. They're not in here like you guys, right? You guys are independent. So how do we take this back to them, or if we join this group, how is this going? How does this transition to them?
Yeah.
So that way we don't always have to do all the legwork for them to motivate them to get to that point.
And that's in sales and fulfillment, because the last thing I want to do, because he does still sell, we still sell ourselves. The last thing I want to do is sell high ticket, and our trainers not be on board to fulfill high ticket.
Right.
So I can answer that for you guys. That's actually what I'm working with Andy next. I have an online coach with me, and the first thing he was like, okay, well, now that we fixed your pricing and your tiers and all that stuff, what do you feel like you need me next? Well, I said, okay, well, I need to get my coach on board. He's like, okay, well, here's what I want you to do. What do you need? What does Vital Strength Fitness need? What does she need as a coach? Have that conversation with her. I'm not going to get on a call with you until you have that conversation. We have it. And once I have that conversation with her, my conversation with Andy is going to be, how do we teach her? And he said, he's even offered, let's get her on a call as well. So that way he can help me teach her what we're trying to do, what Vital Strength Fitness is trying to go towards. So they give you your full support. They are going to meet you where you're at, and they will teach you how to improve whatever you're already trying to sell.
And we will train your staff. We will train your staff. And even the video portals that are the support with it, I built them to be, like you said, your guy loves it, right? I built them to not just be effective, but they're like all 8 to 20 minutes. You know, like when you have new people are not going to watch a 90-minute effing video. They're just not going to happen. So they're short, they're segmented to the little things, and they're entertaining, and there's a lot of belief building, right? And why it's like I'm showing results of just the clients, even with fulfillment, right? And it's just it's entertaining. You know, I do stupid humor stuff, but I do a lot of belief building, because if your staff doesn't buy into it, because that's the first thing, you guys get this. But your employees are like, people are resistant to change, right? And so, but everything I've designed, obviously it's not just to make money, but it's to buy your time back. It's gotta be scalable. And that's I've done it across all my gyms, all these different operators, all the people underneath them. So it's all designed and gotten better to be more scalable to teach your staff. And yes, like I just did a staff meeting with, I can't even remember, I'm drawing a blank, but they had out of Vegas, Gabby, she owns the Hot Pilates thing. She certifies everybody. But we had our whole staff on. And she's like, I need them to believe it. We got on, they believed it. She's like, thank you so much. And then there's the materials in there, the course materials that is designed not just for the owners, but for the employees. And like Andy said, we will train your staff too. Taylor has a regular call every week where you can have your people get on and get sales training and get reps in. And that's a really good tool. So it's designed for exactly what you're talking about. And yeah, you might have hurdles here and there. We'll work on that. We'll figure it out. We'll figure out the nuances to make sure it works.
You can also play it fast if you need to cram. Like,
yes.
For me, it's like,
yes.
Oh shit, I got one. But I'm so busy. I've forgotten what we covered. And so I'll, on the way, literally in the car, I'll fast forward that, watched it double time because I've seen it several times. And by the time I get there, I've crammed.
You're ready, yeah.
Pick out what you need at that moment.
Yeah.
That's
Right, that's very helpful because, like I said, I get it. I've been to 1,000 sales.
Yeah.
I know how to sell personal training.
Yeah.
High tickets, man, the employees are so scared because we're in a small town. They're scared to ask for more than $50.
And they're selling out of their own pockets too. They're like, that's my whole, I could never pay that much. And I had that when I started in the industry too. Yeah, I was selling personal training at $79, $89 an hour at Lifetime. And I'm flat broke then. So it's like, well, who would pay me $840 a month? Like, that's outrageous. You know what I mean? But yeah, we can overcome that stuff. Definitely. It's, like I said, we've done it everywhere. I call it the butthole pucker. You know what I mean? It's like you're sitting in front of that person. They know, you're like, what did I walk into? They're like, they know they need it. Like, this is perfect for them and all this, but like, you're so scared to just say the cost of the program is $2K, $3K, whatever it is. Like, you're so scared, but then like, okay. And you're like, oh shit, did that just happen? It's just a lot easier than I thought. But you're right, we have to make sure they believe it. And that's part of our job.
The next step is selling, putting to it, because we have all the aspects to sell this high ticket. We have modalities, recovery, peptides. We have it all. We just need that person, the trainers, to fulfill that piece of the mentoring, the coaching,
Yep. And not everybody has to do it. You can separate sales from mentorship. And it depends on what employees you have and what positions. Sometimes they sell, but that doesn't have to be the person fulfilling the mentorship either. So it's specific to how we build it into somebody's business is different than that person's business and who they have, right? We just build it the best way for exactly how we need it to run for you. Yeah. Good question. Matt, you had something?
Yeah, I was just going to, a couple of things is I heard several people say, hey, I only did half of this. I only did part of this. And I get that, right? And that's why when Scott and I were talking about this, I said, man, they're going to need help going home and doing ads and writing copy and getting emails and doing all of that. That's one of the reasons. That doesn't include my stuff.
Yeah.
Your stuff, but, implement it faster because you don't have to go put all the pieces together yourself. And the second part, and this is also something we're talking about, we're all going to be starting at the same spot with those of us who are implementing peptides for the first time or implementing this. And if you get a half dozen or a dozen people starting in the same spot, you get a lot of momentum from the group learning and the group implementing that. And this is going to happen. I just know it because it always happens with this stuff. There'll be like 4 or 5 people like, I'm certain I'm going to do it now. There'll be like 6 or 7 people trying to book appointments for the next 3 weeks. Like, being 2 months behind is a really big deal, and only implementing part of it is a really big deal. So, I would just say, like, even, hearing a firm like, oh, we only did this part, we only did this part, like, just freaking go all in, get all the shit all at once.
Yeah. And we're all stretched thin. That's the hardest part, right? And we can't do everything. And so we want to make sure we focus on just the right things at the right time. And again, like that's where you do want to get leverage. And that's why, because we always begin with the end in mind. We know we're stretched thin. We know staff doesn't execute. And so simple, effective, what works. And sometimes we don't have 100%. We can't give it. That's okay. Like Rob he's got the other job. He can't give that's great. We're going to meet you where you're at and figure out. It's not like we're just going to come down on you for not doing your shit. Like, it's life, man.
Go back to your Venn diagram that you had yesterday, right? Like building your dream business. I know I need all the other steps, but the most important thing for me right now was cash flow.
Like the cash register.
And exactly. And so that's what we've been focusing on for the 3 months? Yeah, last 3 months was just fixing my pricing and building up my confidence and be able to ask for more money. And now the next step is, okay, teaching my staff, right? Like it's not just a 1 through 5. You could start at 5. Maybe you just need to work on your CEO skills because you have all the other systems in place. But again, they're just going to meet you where you're at. And again, if you guys are just even on the cusp, just get on the phone and just, he's going to ask you, or Andy, they're going to ask you where your business is at and where do you feel you need the most help. And then you're going to start there. And then everything's just going to start to fall into place. So
you guys help triage and prioritize.
Yes.
So like I got 5 minutes. Okay, that's not your problem. This is your problem. This is going to be the biggest lever, the biggest bang for your buck, because that's what I need. And I don't have time or knowledge. And that's a relief. Still doing half the shit. I'm getting way more than I got for that.
Take my money.
I appreciate the kind words. We didn't build in this time for this. We didn't expect this. But I really appreciate all the kind words and everything. And
man, you and PT Legends, you guys have, I know for myself, and I'm sure Rob can attest this, but like, you saved my business, man. You've really helped, and you've given me just that confidence back and reminding me why I got back into this. And like, I'm excited to wake up as early as I do and work as many days as I do. And it's nice to be paid what you're actually worth.
Yeah.
And hope.
Yeah.
That's on the sales team.
Yeah, no kidding, right? When you get some extra hours, okay, we're gonna let you field some calls. But yeah, we spend a lot of time. Matt Weaver and I also talk about, like, because he's one of those guys too. We help more than we should sometimes because we just care a lot, and we know we spend more time and it limits the amount of people that we can work with. But could we turn it into a $5 million business? Yeah, we really wanted to cut corners and whatever, but that's just not, it's not what we want to do, right? So it means the world that you guys spend this time, energy, attention, your travel, your money. It's not cheap to fly and get a hotel and all that stuff, and even just get away from your business. So I really appreciate it. This is the stuff, these are the kind of things and the relationships that I built that have just got me right here, period. I wouldn't be standing on stage teaching you guys if I didn't get introduced to the right people and the right coaches and work with them and get exposed to ideas and move things along, period. Again, the number one thing that's going to hold you back is what you don't know, period. Period. So you just got to get around people to get exposed to these new ideas and learn how to do it. So now we have a decision to make, because technically what we got wrong with the venue is that we were supposed to be out by 5:30, like breaking this down. And so we were supposed to wrap by 5, which Don let us know. So we did want to do one more thing. But we can either try and cram it in insanely fast, or what we can do is I could do like a Zoom on Monday afternoon in dead hours or something like that, or a week from now, and build out like your 90-day plan together. Would you want to do that instead of just rushing it? I think that would be great. Monday is some sort of a holiday, right? I will be working. President's Day? Okay. So it's not really a holiday, but it's a holiday. Who would want to do this? And I'm going to be in Orlando from Wednesday to Sunday, aren't I? Who would want to do this on, show of hands if somebody would be available on a Monday, like down hours. Okay, and would want to do it? Would that be the best route? Probably. It sounds like a lot of hands went up. So I'm going to schedule something in like down hours. And again, we're in different time zones, but usually I like to do it where it's like 10, 11, 12, something like that, like Pacific time, because that hits everybody's mid-afternoon hours where they typically don't have stuff. I will record it and I will send it out for anybody that cannot attend. But what we'll all do, I want you to do is take your books and open them up, and we'll do it on the Zoom call together, okay? Because at the back of it is the 90-day planning stuff. 90-day planning. We're going to talk about exactly what we're going to do for you guys for us to execute. So we'll do that together. So keep an eye on your email. If you haven't gotten emails on the events, check your junk or spam folder and make sure to mark this as safe. But we'll send it out over text. We'll send it out over email. We'll get a time on there, and we'll crush it together. Real quick, before we go then, 'cause we're supposed to leave. We'll get to that all later. Just huge thank you to the sponsors. Really big. And these are the guys that I know very well, and sometimes for years and years and years, and I work with and I trust. I can't even put a sponsor in front of you if I don't believe in their stuff, right? And I won't do it. So thank you to them. Thank you to Andy and Taylor over there. Phenomenal. And without them, this would be shit. There's no way. They've helped out so much. And thank you to you guys for just putting in the attention, the contribution, the conversations, and getting so much out of this and sharing your experiences. That keeps me going. And if I can just leave you with one last thing, like, you can do this. I know business can feel like you're just on a hamster wheel and you're going nowhere sometimes. It's frustrating to be stuck or struggling, or just, even if you're doing well, I want to continue to grow, but I can't break through. And it's like you're spinning your wheels. You can break through it. My hope for you is that today is that lead domino. Today and this event was your lead domino to several years from now, you go to the moon and you get everything out of life that you want and that you deserve and that you're working for. And you get to a point where you can work because you want to and not because you have to. So thank you guys. Thank you guys for coming.